All right. Hello, everybody. Welcome back to another episode of the Market Open. It is Friday, May 10th, 8:48 a.m. What's up, everyone? How are you guys doing? It is Friday. We are officially done with this week. We got to the end of the week, and we are here now. And it's been a pretty fun week. Been an exciting week. Got a lot of stuff done. Had a lot of fun, I guess, this week. And stock market has been interesting as well. Unfortunately, some of the stocks we all like have not had the best week, like a Palantir or Robinhood. But I think the companies themselves did really well in regards to their earnings. This week was a crazy week in terms of all the earnings we had and all the sort of stuff we had to just talk about. We got jobs numbers yesterday I want to talk about as well. Apple, some interesting stuff happened. They had an iPad event. That was a big thing for the market. And then obviously we had a bunch of earnings throughout the entire week. Obviously, in my life, it's been a bit of a week just on a personal level. Lots of different things have been happening. You guys have been kind of watching this journey and seeing this all kind of play out. Sorry if the camera here is tilted a little bit. I actually bought a new tripod yesterday because when I went to DC, my old tripod, I lost one of the parts to make it to make the camera stick because I think I left it somewhere. And so yesterday I had to buy a new one. So it's a little crooked, but that's why I was late by a couple minutes as well. I was just adjusting it, but we'll fix that up over the weekend. Yeah, it's been a crazy week. It's been a fun week. It's been an exciting week, I guess, given all the different stuff that went down. But I do think it was a lot of momentum in regards to different companies that a lot of us care about, even if stock prices did not keep up with all the momentum. There's a glare hollow thing coming from the light. Yeah, it's a little weird here. I don't know, but I guess we're gonna have to keep that there. Good morning, Dylan Rogers, Mr. Russo, Benny. What's up, Brandon? You know, it's weird. I feel like I haven't talked to you guys, even though we did the market open 4 times out of 5 times this week. We only missed Tuesday, so we did it every day. I think what's messing with me is we missed the market close I think 2 times, and we're gonna miss it today as well. So whenever that happens, I feel like I'm off my schedule. But we are back. And I'm happy you guys are here today. My hair is kind of cooperating today, right? This hair, you guys haven't seen this hairstyle before. Dude, if my hair could look like this every day, I actually wouldn't mind having my hair look like this. The way I slept, it concocted this hair to look like this. There's a nice little curve right here. I like it. I actually like my hair like this, but this is not the hair is looking righteous. See, okay, it's not just me. It's not just me. I actually thought the hair was looking good, but it happens randomly. So this is the thing. I need a hairstylist that can make this happen on the spot, and I can't do that. I don't know how to do it. If I could do that, I would do that every day. This is if this hair could stay like this forever, which is kind of like Carp's hair, right? Just stays the way it is. That would be pretty dope. So yeah, that would be pretty fun. Sanjay, what's up? We're back in the studio. Kumar Abhishek back in the studio. Yes, hello, good morning. All right. So we're going to start off the market open with a fun thing that happened yesterday, and we're going to keep going from there. Yesterday, I had the privilege of having Vlad back on the channel from Robinhood, and he was able to break down some of the stuff that has gone on in the world of their Q1 earnings. And I think you guys, I mean, for those that didn't see it, you're going to get a kick out of the last minute. So you guys know how I don't like movies, right? Not that I don't like movies, but I just don't know how to watch movies. I'm just not a big movie guy. Well, at the end, let me just play the clip. Let me play the clip, and then I'll get into all the analysis, and then we'll go from there. So yeah, this it didn't end well the way the interview actually ended great. It's just it ended in a way that was more embarrassing for me than anything else. So let me pull this up right here, and you guys can see how it ends, and then we're going to analyze the insanity of this and how crazy this was. Here we go. So let's pull this up.
No idea who Wes Anderson.
No. I know it should hopefully lead to a much larger company over the next decade. Last question for you, Vlad. Thank you so much for joining my channel and doing the press run with me, CNBC, Bloomberg. It really, really means a lot to my channel and my community as well. Question from the community. Brian Thurm says, ask him what's on his Apple Music playlist before getting amped for earnings. And let me add a little bit to this question. This was a rock star quarter. This was a good quarter, and you and the 2,300 people there deserve your flowers for the execution of building this quarter. You knew the results before all of us, so you knew going into that earnings call you're gonna get to talk a little bit more confident than you have on other quarters. How do you get pumped for an earnings like this?
The reason I said you deserve your flowers and it's a rock star quarter as well is because if it was a shitty quarter, he would get all the shit. So I feel like just as a media person, it's fair to tell someone, hey, you did a good job, because we're definitely going to shit on them if they do a bad job, right? So it's the ebbs and flows, but they definitely deserve it when they actually execute.
It's a really good question. Are you ready for a weird answer?
Okay. Well, nothing was weirder than you read the physics books and you do proofs for fun. That was kind of weird, but go ahead.
Yeah. Have you do you like Wes Anderson movies?
All right. So at this moment, I was just like, I know who Wes Anderson is. I know who he is. And the only reason I know who he is because there's like this TikTok trend about Wes Anderson style movies. But I've never seen a Wes Anderson movie in my life. So I was just like, well, that's not going to go too well.
Okay, Vlad, I have a confession to make. When I asked you,
You have no idea who Wes Anderson is.
No, I know Wes Anderson. No, I know Wes Anderson. When you remember when I asked you on the podcast, hey, what's your favorite movie? And you were like, Back to the Future. And I was like, oh yeah, great movie. I've never watched Back to the Future, but 2 weeks later, I watched the Back to the Future, so I could officially be like, I wasn't lying to Vlad. I actually watched Back to the Future. So I don't know Wes Anderson movies that well.
Yeah. Okay. So you've never seen The Life Aquatic with Steve Zissou?
What the heck is The Life Aquatic, dude? I was just like, I couldn't even kind of lie about that. I was like, no, dude, I don't know what you're talking about.
No.
Yeah. Okay. Well, here's another one for you to watch. So I have been bumping The Life Aquatic with Steve Zissou soundtrack on repeat for the entirety of the quarter, maybe even longer, maybe even stretching back to 2023.
And is that just instrumentals, or there's actual like lyrics in the songs and stuff?
No, it's a good little compilation.
Okay,
there's some David Bowie in there, some Joan Baez, and some.
I don't know who any of these people are. I think I've heard David Bowie before. I don't know who Joan Baez is. I was just like, yep, okay, great compilation. Nice
Instrumentals.
Okay,
yeah,
that's
you should check it out.
Yeah. No, I should check it out. And I just have to say, this chat, they live off of embarrassing me, all 2,000 of them in the morning. So the fact that you asked me a question about movies, which is the one thing I do not know about, they've just got a kick out of it. They love it. So thank you for that, Vlad.
Yeah, it's the kind of movie that I would recommend watching. Like you have to start it right before midnight and finish at like 2 a.m. I wouldn't watch it during the daytime.
Okay, I love it. Will do.
Yeah,
ladies and gentlemen.
Back to the Future.
Yeah. Oh, by the way, I saw Back to the Future 2. That was good. I couldn't get through the third one. I had to clock out. I was like,
yeah,
it was not. Good. It was not the best.
Okay. I liked that when I was a kid, but yeah, I don't know. I like 1 and 2. I'm with you.
I love it. Thank you, Vlad, for being here. It means
dude, this whole thing last night was crazy. This thing was actually, you know why it was crazy? And let me describe kind of the scenario of how this whole went down. So a couple weeks ago, they reached out to me and they're like, do you want to have Vlad on the channel again to talk about earnings? And I was like, sure, right? No, yeah, like, of course, yeah, that'd be awesome. So that was scheduled. We were all good to go. And then I did not expect this week to go the way it did with the Palantir event and then the meeting Carp and all this stuff, right? So like that in and of itself was crazy. And it was kind of living off a high from Monday to Thursday. But then Thursday I had to drive back with Arnie. So it was a 4-hour drive. So we're just driving back. I have not slept still. I mean, even last night, I think I slept at 2 o'clock. So I got like maybe 5 hours of sleep, which is decent, 5 hours of sleep. But the past couple of days, I did not sleep. It would be like sleeping at like 4 a.m., wake up at 6:30 and go to the event and all this stuff. So I really didn't sleep the past couple of days. So I was dead tired after this 4-hour drive, but I knew I had to do this Vlad interview. And so I'm just keeping the energy. I took a shower. I'm like, all right, let me get my shit together. Let's get this interview ready. And then I just get on live. And then my mom starts yelling from downstairs because she didn't get to talk to me. She had just came home from work and she was like, hey, come down, like, so we can talk about everything. And this is like 2 minutes before like Vlad comes live. And I'm like trying to like tell her like, actually, no, this was when I was live already. This is so like she's like yelling while Vlad's like talking, and I'm like quickly going into my iMessage and being like, Mom, I'm a little busy. I have like an interview right now. And I guess I forgot to tell her or something that I had the interview. I thought I did. I'm pretty sure I did, but she probably forgot. So like in the middle of this thing, I'm just like, yeah, I can't do this right now, Mom. Can't do this right now. Actually, a little busy. But it was kind of crazy, dude, because it's like your mom is calling you from downstairs, acting as if you're just in your room doing nothing, right? And so she's just like yelling normally how moms yell when they want you to come downstairs, especially if they like make you food and like it's getting cold and And there's obviously a microwave, so you can heat it up, but they feel like if it gets cold, it will just never get hot again. So they yell on the top of their lungs so you can come downstairs and get the food. That's just something that moms do. And I'm just like, there is a literal billionaire that just had a monster quarter sitting right next to me, and I'm trying to talk to him. And your mom is like, hey, come downstairs. It was insane, dude. It was absolutely insane. And so it was kind of surreal last night. Like last night it hit me. I was like, this was just like a weird week, dude. This was a crazy week, but it was a fun week, and it was an exciting week. I'm happy we got the week done, and we got to talk about everything and just do what we need to do. When are you moving out? Probably in a couple of years. I'm 26. I'll be 27 in October. I think I'll move out like around 28, 29. There's not a need to move out right now, dude. Right now, I'd be wasting money. So I have no desire to move out. But eventually that will happen. But the point is, like, it was just so surreal, the whole thing that was happening at the moment. But we got the job done. It was not meatloaf. It was Indian food. By the way, Arnie tried Indian food last night, and he enjoyed it. He loved it. So it was good. All right. So the actual stuff around the stock market. Let's talk a little bit about Robinhood, and then we'll go into it. So first of all, the stock as well. Look, I know the stock kind of sucked yesterday, and we'll see what happens to the stock today. But I've kind of concluded, and I wrote this big post on Twitter, that I think the market, and I'll share one more clip from the Vlad interview because I asked him a really good question, I think, about the sustainability of this. The biggest thing I believe, here's two reasons why I think the stock is down. Market's in a bad mood about inflation. I think that'll ease up. I think inflation is definitely coming down, and we'll go through some of that data in a bit. And then second of all, I think the market's kind of like, we don't believe you can put up the second quarter of numbers that you did in Q1. Meet Kevin actually did a video about Robinhood's numbers, and Meet Kevin was like, well, the market's scared that Robinhood's going to get a crypto ban because crypto was obviously $126 million of revenue. It influenced their GAAP profitability. So the market's like, the only reason you're GAAP profitable or you had this big beat is because of crypto. The market's actually wrong about that. The headline numbers look a bit better because of the crypto numbers being juiced up, but that's not the reason the Robinhood had a phenomenal quarter. The reason was for net deposits and gold subscribers. And so it's actually, I understand why the market thinks, oh, Robinhood is just a fluke. If crypto doesn't do well in the next 2 months, then the crypto numbers are not going to be the best. But that's not the Robinhood thesis. That's never been like the core thesis. Maybe like a year ago, the core thesis was it'll run with Bitcoin. But as they've transformed the company fundamentally, I don't think that's the core thesis anymore. So I do believe that if Robinhood executes on another good quarter, which I think they're going to be able to do, then it's not going to be about crypto. Crypto numbers will go down, which is okay. But if the core deposits and gold subscribers go up and net interest income stays fine, then even if they have a slightly worse quarter than they had this quarter in terms of top line revenue growth, the street's eventually going to take these suckers to $25. Like, it's not a joke at this point. Like, you cannot ignore. Sometimes you have to become so good you're undeniable, right? And there are certain moments in life where it's like people can't ignore you anymore, right? They have to pay attention. And I think Robinhood is going through one of those phases in their trajectory where like the street has to pay attention because these numbers are ridiculous. So here's when I asked Vlad about the sustainability of this type of a quarter, and let's see what he has to say about that.
Competitive place to develop this.
You told me that you have a belief that you want the gold subscription plan.
Their rate of the philosophy behind it is
so good. I mean, 260,000 gold members is not what I expected. And half of that's already been done in April, which about 140,000, which leads me to my next question here. I think one concern Wall Street might have about this type of quarter is that the numbers are so good, they're so explosive, that it's a fluke. It's a one-time thing. What would you say to the people that are listening that are like, all right, Vlad did it once. Can he really do it again? Can you guys really replicate what you're doing or even have a chance to do that in Q2?
Yeah, I think there have been quarters in the past where the market environment has just been so idiosyncratically strong that, it's caught us by surprise as well. So Q1 of 2020 is probably an example. Nobody really predicted that COVID would have the effect that it ended up having on the markets and on our business. Our business grew tremendously. Q1 of 21 was a similar quarter in terms of, excuse me, the meme stock.
The reason I didn't say bless you is because I was on Twitter like pulling something up, so I didn't even know what that was. I thought he just like coughed or something. I would have said bless you. I wasn't trying to be rude. I had no idea he sneezed.
Rally and some of the excitement around cryptocurrencies. I think what's different about this quarter is it's really just the strategy that we've been executing on for the past year and a half. It's a diversified quarter. We're seeing strength across all sides of the business. not just the active trader products, but also the asset growth, retirement, gold. These are traditionally more passive products. And as we look ahead, there's a lot of products that are either in early stages or haven't been released yet that we're also very excited about. And we think that they can drive long-term growth. Future is a great example on the active trader side. The Web Pro product, I mean, I've noticed in your live streams, you're not using Robinhood for web.
I'm not.
Okay, that also caught me off guard, dude, because like I knew he like checks out the streams here and there, but when he said that shit, I was just like, oh, he actually tunes into the content. I mean, for him to know that on the live streams we use Webull instead of Robinhood, and for him to bring that up, it was kind of crazy when he said that too. That was dope. But basically, he's acknowledging like, yeah, our product sucks, and like, you know, I get why you're not using our web product.
And I think that I know why that is. It's just realistically, our web product is more geared toward novice investors, people that are just getting started.
Yeah.
And for the folks that are more active and are doing deeper analysis, we come up short currently for that use case. So we're working on fixing that, and we think that's going to be a huge opportunity. And that's going to dovetail nicely with futures and index options and other products that are on the horizon. And the international growth is just getting started. We're seeing really good signs there, but if you think about the total market opportunity, it's multiples in terms of accounts of what we have in the U.S. And we've like built the infrastructure and the capability to actually go after that. So it feels a little bit different than where the company was in 2020 and in 2021, where we were just kind of trying to keep up with the demand that we were seeing. Now we're a much more mature, stable company with a strong foundation. We're moving quickly, executing on our strategy. And so kind of tactically, quarter by quarter, I try to avoid planning it out that way. We have a multi-year roadmap that we're executing on. But I think the end result of that is going to be higher revenues, expenses that grow less quickly than our revenues. And it'll be great for customers, but also great for our shareholders.
Yeah, you know, and it's so interesting.
So, I mean, there's his answer. He's basically like, yeah, guys, we're gonna, you know, the company is fundamentally transformed. It's a different type of company. The company is not just contingent upon one or two revenue streams. It's diversified. There's a lot of tailwinds going into all the different offerings that they're going to bring up over the next few quarters, like the web version of Robinhood being more advanced. So I think from that perspective, if you believe that their deposits and gold subscribers will go up, which he says half of Q1's deposits and gold subs have happened in 1 month of Q2, and they haven't even rolled out the credit card or the 1% match yet, or the web version, or futures, or index options. It just leads me to believe if they can pull off another quarter, the street's going to really appreciate them. And I think that's okay. Bitcoin, right, by the way, as well, 63,000. We'll talk about Bitcoin. S&P at 521. The S&P is, guys, do we not realize the S&P is basically at all-time highs? We'll talk about that in a second. But just to conclude here, I think if they put up another monster quarter, that is when the stock run. Unfortunately, maybe we have to wait 90 days. But the stock will run off of the continued acceleration, not off of a one-time fluke. And I don't blame the street for thinking it's a one-time fluke. I understand that concern. I would front run that concern, because if you knew anything about the company, you would know it's probably not a fluke. But the street is the street, right? They're irrational. They don't really care as much about Robinhood as a lot of people that study it in depth. So they're going to need to see some more numbers. If that's the case, then fine. I mean, I'm in this for the long term, and I have options going into 2026, so I have time for this to play out. And when I want this to play out, I don't want this to go to $25 tomorrow and then drop back to 17. Like, I want this when this, dude, it's like Palantir. When it got from 16 to 24, now I know it's at like 21, but we haven't seen below 20 again. And maybe we get there, but it's been a very long time since the market was like, yeah, we're just going to sell this off because it's that bad. In fact, all the analysts upgraded Palantir over the past week as well. So when Robinhood goes above 23, 24, it should stay there, and it shouldn't like flop back down to 17, 18 off of some bad news, because it should become so undeniable, the company that they are, that the street is ready to continue to buy them. So that's what we got going on Robinhood. Thank you, everybody, for watching the interview last night. Really meant a lot for Vlad coming on the channel and doing the press run with me and some of the other media entities. I think he did CNBC the day of earnings, and then he did me the day after, which is it's super special, dude. If this thing ends up becoming much bigger than it is right now, and one day we're interviewing Jensen and Elon, and it's kind of like an Andrew Ross Sorkin thing. I will always be grateful to Vlad because I think he's the first one who gave me a chance at like just like letting me interview him, letting me interview someone of high importance. And I think, you know, I was listening to some other journalists like careers, and they said there's always that one person that gave them the opportunity to talk to them that was highly more influential, but they brought you into their world, and if you did a good job, that accelerated you to different levels. And yeah, or you know, from the street sense, he put me on. That's in terms of what I'm beneficial saying right there. He put me on is what I'm trying to say. So I'm always gonna be grateful to Vlad, and hopefully they can keep executing so he can keep coming on the channel and he can keep sounding super fucking confident and just being like, yeah, we're doing our thing. We're doing our thing. And we're doing guy Dan Ives as well. Yes. And Dan is going to be on the channel. I think in 2 weeks. He texted me the other day and he was like, he's just been so busy, dude. Dan's been fucking flying everywhere because now it's a big tech season, earnings season. So yeah, Dan will be on the channel as well, and it'll be super cool. Adam, what's up? Thank you everybody for being here today. Thomas, I'm beneficial, Wong, Vinny, thank you all. All right, so that was Robinhood. Those are my thoughts on it, and we'll see what happens to the stock now as well. Macro. Let's talk macro. The S&P 500 is just absolutely insane, dude. Does people notice, right, that even though certain companies are down, we are at an all-time high for the S&P? I mean, all-time high was 525, but we're basically there. It's like we slowly have gotten back up there. Look at Amazon. Amazon slowly back to 189, all-time highs. It was at 171 after their earnings. Google back to it's at 168 right now, but it was at 173 yesterday, right? Just went all the way back there. Look at a big one. I bet a bunch of people didn't look at this one. Netflix, 620. Remember when it dropped to 540? Slowly made it's up 10% in the last week. Slowly made its way back up to these levels, to where it was right before earnings, which it was basically at this like 625, 630 range. So really incredible seeing the market kind of buy back in to these companies. Palantir is up about 1% in the pre-market. I bought about 20 shares of Palantir yesterday and 25 shares of Robinhood yesterday as well. I tweeted those on the dip. Celsius, nice little run back to 83, fell to like 68. CleanSpark, they had a great earnings. They're up 5%. Roblox, they had a very crappy earnings. Kathy Wood bought like 500,000 shares yesterday. She's liquidating Teladoc, so she's getting rid of all of her T-Doc and putting it into Roblox. Teladoc right now, $12.28. But it's really interesting to see how the market's working. The QQQ is back to 442. This sucker was at, let's look at the 1 month or the 3 month. This thing was at 413, dude. Like, look at this V-shape. And look at the V-shape went up and then it went all the way back down. I think this was like some more geopolitical stuff, and then it went right back up. And the same thing with the S&P. If we look at the 3 month on that, 493 was on April 19th. It's so crazy because it kind of reminds me of October 2023 when we had like 410 on the S&P and then we just kept going higher. And it's like, if you just look at this chart, it's pretty incredible. 493 was the dip. Some people were expecting 470. Even me at one point, I was like, dude, 480 would be a full 10%. Let's just get it over with, get there, and so we can move on. And the market ate up that dip, and they were like, no, we're just not going to let it get to that level. And now we're here at 522. Now, why are we getting here? So let's talk a little bit about some of the macroeconomic reasons for this. First of all, the 10-year is not at 4.7 as it was over the past 3 weeks. 10 years collapsed down here to 4.4. So people are buying up that 10-year, which is allowing the 10-year to go down a little bit. And we're seeing 4.485. Oh, let's check on money market funds. I didn't check money market funds yesterday because I was chopping it up with Vlad. Money market funds. Interesting. What do you guys think? Increase or decrease? Put it in the chat. Increase or decrease? This came out yesterday. Increase or decrease? What do you think? I'll let you guys put it in the chat, and then we'll get to it. So we got the 10-year here at 4.4. Oil prices, again, have still come down. It's up a little bit today. We're at $79.55, but we are below that $80 for WTI crude. I've noticed my oil prices are starting to come down just slightly. I mean, not a lot, but there is a little bit of volatility to the downside there. So again, without shelter and energy, CPI would be 1.67%. You put those two in, collapses everything, or it accelerates everything in regards to what CPI should look like. We're going to get CPI next week. We'll talk about that as well. But if those two can somewhat come down, I mean, we're looking at a market that's going to have a maybe sustained decrease when it comes to inflation, which is going to be very, very important as well. You guys said decrease, decrease, decrease. Okay, I'm seeing more decreases than increases. Money market funds have increased by $31 billion to $6 trillion for the week. Now, why is that crazy? Because this week, or like the last 7 days, which is what this measures, the market went up. I mean, the S&P this week, I believe, is up 2% at least. So money is going to the sidelines. Yeah, 2.97%. Market's up 2.97%. Money's going to the sidelines, and market's still going higher. It's weird, dude. It's weird. It's very interesting. And maybe money market funds don't have the biggest effect on the stock market. It's just, but it does make you think, well, there's more and more money that's just waiting on the sidelines eventually if there is a reason to come back into the market. And if there is, and the market's starting from 520, 525, then that acceleration of capital into the market is not starting at 493. It's starting at the S&P at all-time highs, which is pretty damn incredible to see how that's playing out. Tax refunds, maybe. Could be tax refunds. It could be a variety of things, but it could also be people are scared that the market's topping out, but the actual market is like, nope, we are continuing to buy. So we got that 520 right there on the S&P. Again, QQQ at 441. 10 years coming down, oil's coming down. We've seen a lot of things around shelter disinflation in terms of the inventory of shelter start to go higher. That's making it a bit difficult for the Fed, or at least for the market, to feel that shelter is going to be as hot as it was in the previous CPI. And if that's the case, then maybe we are setting up for a bit of a rally as CPI comes through and it's not as bad as we could see it be. So we're going to get CPI on, and I want to pull up a couple of charts around CPI and discuss that and expectations. I think CPI is what, May 14th? So May 14th is Tuesday. Okay, so literally Tuesday. So 8:20 a.m. we'll be live on Tuesday, the day after we will have PPI. So here's what Fundstrat thinks. Here's what Tom Lee thinks as well around CPI. So he says, we think an inline April CPI will highlight the possibility that auto insurance's disproportionate impact on CPI is ebbing, could push higher the number of Fed cuts, which are positive for stocks. Bottom line, we are still buy in May. The fact that stocks rose this week is a positive signal. So Fundstrat, Tom Lee, is basically like, we think auto insurance is going to have a disproportionate impact on CPI, but that disproportionate impact is going to start to come down, and you're going to see that in the numbers. And if we start to see that impact come down in the numbers, then CPI is going to start to decrease a little bit. Maybe it goes from 3.5 to 3.3, 3.4. If we get anything below 3.5, I think the market's going to be excited. If we get above 3.5, I think the market's going to be really upset. And if we come in line with 3.5, the market's still probably going to be upset, but not going to be as upset as they might want it to be. So is there a chance we go to 3.6? Absolutely. Because in April, that's when the Israel-Iran situation was happening. That's when oil prices were inflated. I think the Fed is begging for inflation to finally start coming down from a shelter perspective in April. And maybe we get that, maybe we don't. But it is going to be a little dicey, dude. If we get a tough CPI, we're at 520 on the S&P. I wonder where we go. I also wonder if the market even cares. If we S&P at 520 right now, does the market care if we get a tough CPI? And if it does care and we drop to 510, is it that bad? I mean, 510 is still 510. That's still incredible for the market. So it's going to be really interesting to see what happens for CPI. Broccoli Bob says bad CPI next week equals Palantir below 20. Yeah, I think that could happen. I do think the dip on Palantir below 20 would get eaten up. We talked about Palantir over the past week, but all the price targets upgraded Palantir. Tyler Radke from Citi, Mariana, Wedbush, they kept their buy ratings and their $28, $35 prices. Even Rishi went from 5 to 9. So to me, like I do think the market would buy the dip on Palantir below 21. I think the market's buying this dip right now, even if it's not aggressively. But if it's a bad CPI, then all bets are off the table. Everything is probably going to take a hit. The thing is, that CPI, I feel like, would be cyclical. That CPI would not be bad for long. So if we do get like a monster dip, I think all the sort of bullish macro analysts would say this actually is a buy the dip opportunity because you usually don't get this type of a dip in the middle of a bull market, right? And if you're getting it for some fluke reason like CPI, then maybe there would be a reason to buy it a little higher. Fake job postings are everywhere, but businesses aren't hiring and paying those higher wages. It is what it is. Well, that's true. We also got unemployment data yesterday, and that unemployment data was actually very interesting. It was bullish for markets, not bullish for overall economy, but definitely bullish for job reports. So, and for inflation. So what we got yesterday was unemployment. Unemployment benefits surged from 22,000 to 231,000, or surged by 22,000 to 231. That was above 210. So we beat by 22,000. This means 231,000 people in the United States of America claimed unemployment benefits. So that means that more people than what expected, it was expected 210,000 would claim unemployment benefits, needed help from the government to deal with the fact that they are unemployed. That really matters because that means unemployment theoretically is going up, even if it's slightly going up. If that's the case, the Fed cannot keep rates this high. And the logical argument there is because the Fed has to realize something's breaking in the economy if you're seeing this data week after week. However, until inflation shows some type of material slowdown, the Fed can't immediately cut rates because they can't just assume that, oh, if unemployment's going higher, eventually inflation is going to come down. Therefore, we can cut rates and front run the inflation coming down. Now, a lot of the Jeremy Siegels of the world want them to do that because that's what you should have done in 2021, where you should have seen inflation's coming, front run it, raised rates. And instead, they did that in 2022, and they did the fastest rate hike cycle in 40 years. So a lot of the bullish analysts are like, hey, this is the time to cut because we know inflation is going to come down because unemployment's going higher. But I think if this number was like 300,000, then the Fed would do that. It's slightly higher, by 22,000. Imagine it was like 500,000. It was a 2x increase off the expectations on people claiming unemployment. Then I think Jerome Powell has no choice because then the economy is actually breaking. But we're not there yet. We're actually in a bit of a Goldilocks zone where it's going higher, but it's not going that higher. So Jay Powell has time. This subsidizes the time he has to wait on the potential of actually cutting rates. And I think that's a nice zone to be in, but it does mean we're going to have a little bit more uncertainty. Here's another story. So that's some of the stuff we got going on the macro. We'll go to some more macro in a little bit, but S&P is up right now because the 10-year's down, oil's down, shelter should be coming down, and hopefully we get a pretty damn good CPI on Tuesday. And if we don't, we're screwed. If we do, I think the market can sustain itself. A couple other headlines. OpenAI is gonna tackle on Google on Monday. Let's take a look at this.
AI planning to announce its artificial intelligence-powered search product on Monday. That's according to a new report from Reuters saying that the announcement date is subject to change. OpenAI has been working on a search product that could potentially compete with Google and Perplexity. Released on Monday would front-run Google's annual I/O conference. So that's where a little bit of the speculation is coming from, where the tech giant expected to unveil a slew of AI-related products. Could they get ahead of them? We will see. Meantime, separately, a developer of advanced nuclear systems backed by OpenAI CEO Sam Altman has won now investor approval to go public via SPAC.
So, this was really interesting. I saw this headline last night and I was like, So OpenAI is thinking of doing some very interesting things in the context of competing with Google. Now, my question for everyone here in the chat is, do you think at all OpenAI has a real chance of competing with Google? Do you think there's any potential that OpenAI could compete with Google? Because I'm kind of just like, I don't know, dude. These guys, Bing is a thing. And like Bing, even with AI, is really good. And I use it sometimes. But competing with Google is a bit hard there. I know ChatGPT in general is competing with Google and LLMs are competing with Google search. But Google's generative AI thing is getting really good, dude. Like really good. I ask a question. I don't have to look at any links. I get the answer immediately. And as a result of that, I don't know, given Google already has the lock-in for me, how I would leave to use something like ChatGPT. I know a lot of people are using Perplexity and they're interested in that. And that's like this answer machine and that's cool. But like 88 billion times a month, people go to Google. Perplexity is maybe like a couple 100 million, which is important, but it's not really putting a dent into Google. Answering with LLMs is way more compute expensive than a traditional Google search. Yes, but Google is giving you those answers with LLMs in their own generative AI searches, right? So the new startup has to have more expenses, and Google obviously has unlimited money, so they can keep training on the inference costs. But Google's already in my browser. So as soon as I type in something, I get the answer immediately. Like I can ask for how many shares does Palantir have outstanding? It'll give a generative AI answer. Like it'll actually give me a number. Maybe it's not always perfect, but the answer will be there. And it's like, well, I don't know if I need to go anywhere else to check out some of this stuff. So I'm very curious. Google is having their I/O developer event where they're going to introduce a ton of different AI products. I am very sort of curious about how OpenAI might be trying to say, hey, Google, your products that you're releasing for AI are not as strong as you think they are. And we've been actually working on something. This headline came out a couple of months ago, by the way. So they never released the Google competitor, but for a few months, they've been working on something like this. And it's interesting to see that might now pull into fruition. I don't think it's going to affect Google stock. Maybe there's like some short-term volatility because the market's scared. But at this point, Google's last earnings were too good, dude. Those numbers were too damn good. And Sundar sounded like he knows what the hell he's doing now. So I don't imagine the market actually take this as seriously, unless the product is just that good. And if it's that good, then I guess we'll see what it thinks. Another headline I have for you guys, Apple. This was hilarious. You guys might have seen me talk about this on on Finance Junkies last night, but this is the most hilarious thing I've ever seen, dude. This is funny. Apple apologized for their iPad advertisement. Apple apologizing for its advertisement promoting its latest iPad. In a statement obtained by advertising industry publication Ad Age, Tom Myron, Apple's vice president of marketing, said the ads message failed to connect. Creativity is in our DNA in Apple. It's incredibly important. Yada, yada. Our goal is to always celebrate the myriad of ways users express themselves. We missed the mark on this video and we're sorry. I don't have a problem with Apple necessarily creating a bad commercial. Sometimes as a company, you miss the mark on marketing. You suck. The commercial's not that good. It is what it is. Like, it happens, right? And the commercial objectively did suck. It was just not a good commercial. But apologizing for it just makes me more bearish on Apple, dude. That was weird. I was like, you guys have to have some spine. You know, I feel like if that was Tim Cook, he would be like, screw Ad Age, fucking media ad publication. Forget them. We took a risk. Maybe it didn't resonate with consumers, but we're not going to apologize for the average. Like, what do you, this is not, it wasn't a racist ad. It wasn't sexist. It wasn't homophobic. There was not any like ideological issues that the 21st century cares so deeply about. Like, this was just a crappy commercial where they like crushed, you know, a bunch of paint supplies and it turned into this thin iPad. Like, the concept itself wasn't that exciting, but to apologize for it felt so weird, dude. Like stand on business, dude. Have a little bit of like momentum. Just be like, you know, we have some backbone. Like, we can defend our own decisions at the end of the day. I would have said if I was the Apple PR guy, yeah, the ad didn't resonate and we'll try better next time. I would not say the words "I'm sorry." And it's not because I'm cocky or arrogant. It's because me admitting I'm sorry is me kind of towing down to the agenda of what the industry feels I should do, which means I'm letting them dictate me. How did Apple become who it is? Think different. If everyone remembers their iconic ad, they went against the industry. Remember the 1984 type of ad they did with Big Brother and all that stuff? That was a very risky advertisement. You're basically kind of implying Apple's kind of spying on you in extent, right? There was a lot of sort of cultural nuances inside of it that were a bit scary and dystopian. But it worked. Now, this ad was not going to work, even though it was kind of dystopian because the ad concept sucked, but they didn't apologize. And the apology here is very, very sad to me in the context of Apple. It actually makes me bearish on just like the leadership around Apple. On top of that, you got Buffett selling 100 million shares. Everyone's saying like, oh, Buffett was resizing his portfolio. I think everyone's wrong on that. I literally think everyone's wrong on that. If Apple was compounding at 20% year over year, 25%, even 15%, Apple right now is not growing at all. So forget compounding at 1%. They're not growing. If Apple was compounding at even 8, 9%, given how big a company they are, I don't think Buffett sells 100 million shares. Especially not to pay taxes, dude. I think that reason didn't make sense. I think he sold because he was like, let me take some damn profits, dude. I've been in this for a while. And the reason he's taking some profits is because maybe he sees a little bit of downside momentum coming in for Apple. Or maybe his advisors do, right? So I think that is one thing to think about when it comes to Apple. The $100 billion of buybacks, again, that propped up the stock, but that's not really good momentum. Also, the iPads are not that interesting. They have this WWDC event coming up. I'm skeptical of the AI iPhone. I've been skeptical for the past couple of months. I was skeptical about the Vision Pro. I'm skeptical about the AI iPhone. I don't know if this thing is going to be good enough for us to actually all want to upgrade. I think everyone thinks that they're going to want to upgrade. I think everyone thinks AI is becoming so important. It needs to be embedded into your device. You need this personal assistant. I don't know if Apple's really going to make such a compelling case for people to upgrade. And if they do, then I'll say they've done. And the barometer will be if I'll upgrade. You know, like, I mean, dude, I don't know. I'll pay the $400 or $500. I'll probably get to trade in this phone, get a rebate on it if it's that good. I don't know if it's going to be that good, dude. And if it's not, I think it's not going to be the best. Shout out to Chris. I just got Chris in the chat. Chris CRM. Isn't it true that when execs sell, it was planned for weeks, months prior? Yes, and we'll talk about Peter Thiel. I think that's why you're asking that question, Chris. But I got to see Chris at the AI Expo. Chris is actually one of my OG YouTube subscribers, dude. He was here when we had 300 subscribers. I think I got a picture with Chris. Let me show you guys. Yeah, he was part of the channel when we had 300 subs, dude. So it was so awesome for him to be out there and come say hi. And it was just so cool meeting someone in person. So yeah, this is me, Chris, and Arnie right here. This was awesome, dude. This was fun. I forgot to say this, guys, but this was one of those conferences where I got mentioned, dude, or I got recognized. There's like about 7 to 10 people. Every hour, a new person came up to me and they're like, yo, are you Amit? There's my boy Satya from Calgary, Alberta, Canada. He came down. He's like, yo, I flew down just to see you and Carp. And I was like, what, bro? That's insane. Like, he found out about the conference like a couple days before, and then he booked a ticket. And
The reason he was able to book a ticket so easily is because he put in a lot of money when Palantir was $6. So he's made some money. And so yeah, it was super, super cool. Shout out to you, Chris. Speaking of Chris being in the chat, I think you asked this question because there's something I even forgot to bring up, but let's bring it up right now and let's talk about this. Peter Thiel, let's transition here. Peter Thiel sold 7 million shares of Palantir. So let's pull that up right here. We went from Buffett selling Apple to Thiel selling Palantir. So let's look at this. So this is what I'm looking at right now, about 6.2 million shares of Thiel selling Palantir. Now, I'm still investigating this for a couple of reasons. Number one, there are some reports that like he's selling the shares to himself to an extent. I saw some weird stuff going on there. So that's why I didn't even tweet about this yet. You know, I'm actually trying to figure out like what was the sale, because there were a couple of things that came out that said Thiel was buying shares and increasing his position from 7% to 10% of Palantir. There was a couple of articles that said, oh, he's buying more. And so, yeah, he like, I was like, okay, so he's buying more. But then I see these reports that, no, he's actually selling, right? And there's some sales we got in the context of Palantir. So I don't know if he's necessarily buying or selling to himself. If I had to bet, I would say he's definitely selling outright, if I had to guess. As you can see right here, it says private placement. He acquired them in 2006. Name of person whom you acquired, issuer, and then and you can see kind of when this payment went out. And this part was a little bit confusing right here, how this is all going down. If I had to guess, though, I would say he's selling 6.2 million shares. Now, having said that, if he's selling 6.2 million shares, it's a bit confusing because I'm like, oh, 9:30, the market's open. Holy crap.
I came here exactly for the most important moment of the day. And you were here, keep talking about Apple.
Dude, it's been a crazy week, dude. I'm all over the place. So I'm sorry, but I didn't even know it was 9:30. All right, so Peter Thiel sold some shares. Kind of weird. He sold 6 million shares. Don't know why he sold 6 million shares. We'll investigate it further. But Arnie, thank you for being here and waking me up. Go ahead. The market's open, folks. Wake your ass up. Damn, dude. I didn't even realize it was 9:30 a.m. All right, so what do we got? Robinhood up 1.5%, Netflix 619, QQQ 442, S&P 521, Apple 184, Bitcoin 62,878. Where's Palantir? Palantir 2120. It's up 0.32%. Celsius 84. CleanSpark 1765, up 6.1%. Not bad. Roblox $31 right now. Airbnb 147. Airbnb, we actually saw an interview with him yesterday. We'll play that in a bit. I thought he had some interesting stuff to say. ARM, wow. ARM's up 5%. ARM's actually up 5%. Not bad. Not bad at all. So there we go. ARM is up 5%. They had okay earnings, not an amazing earnings, but an okay earnings. NVIDIA back above 900. Tesla 172. Elon made headlines over the week. Saying a bunch of, not over the week, but this morning he said a bunch of stuff. We'll talk about that. He talked about FSD. He talked about the supercharging networks. He talked about a ton of stuff. So we'll discuss that. Rivian 1030, Snowflake 156, ServiceNow 726, CRM, Salesforce 276, Oracle 117, Neo 534, SoFi 707. That's up a little bit here today. GameStop down 1.39%. GameStop is up though. I mean, GameStop's up like 70%, 60% in the past week. So yeah, it was $10 on May 1st, 17 today. So that's up nicely right now. MicroStrategy, $12.95, up 2.48. Chipotle, $32.50. DJT, that was up over this week, but it's down 2% today. PayPal should be $75, but it's at $64. It is what it is. PayPal's down. Google, $170. Google back into that $170 range. And then S&P is green. S&P is green at $520 right now. Consumer sentiment does come out at 10 o'clock. We'll see what happens when that number comes out. That should be an important number for the broader economy. But that's what we got right now in the markets. Last quick thought on the Palantir Peter Thiel sale. So again, it's selling 6 million shares at $20. It is weird, dude, because I don't know why you need $120 million right now if you're Peter Thiel, unless it's a scheduled sale. If it's a scheduled sale, it's a scheduled sale, and it's like, all right, it is what it is. But it is weird. I'm not going to lie. Trying to be fully objective here. I don't know why he's selling that many shares. Like, unless, and again, that's why I'm trying to dig into it before I like report on it. I've heard reports he's selling it to himself or like Mithril Holdings. And so there's like some weird thing that's going on. If I'm wrong about that, if that's a 10% possibility, 90% possibility is he's actually selling it just to get cash and liquidity. It is weird, dude. And I mean, that's a lot of shares you're selling at $20. And it does give me a little cause for concern of like, why that many? Unless it's scheduled, and it is what it is. But I don't know if 6 million can be scheduled. Usually it's like 500,000 to 1 million that are scheduled. So we'll see. We'll go deeper on that into the future. At the end of the day, I mean, these insiders have had stock for years, dude. If he bought this stuff in 2006, inevitably he's going to cash out. His cost base is probably like 5 cents or something. So it's a huge return. He did this with Facebook, right? He didn't wait till Facebook became $500. He sold Facebook when it IPO'd. So it's not the biggest deal in the world. It is a little weird given you think there's some more momentum in the stock and you could sell later. But if these guys are selling on a constant scheduled basis, then if the stock was even $15, they would probably sell because their return is so massive, regardless of if it's 15, 20, 25, because their average is like 5 cents. That probably doesn't matter too much in the context of their sales. Enphase here, 111, Open Door 230, Eli Lilly 773, Hershey's back above $200 now. Cacao prices have started to come down aggressively, so that's been good. And then you got the S&P here at 521. Which is not bad. Why didn't he sell the day of earnings when we hit 25, though? Well, he couldn't sell that day. I don't think any insider is allowed to sell the day of earnings, from my understanding. It's always like a day after or a day before. Usually it's days after. So he probably had to wait. But he did sell like 2 days after, right? So basically 2 days after. I'm pretty sure he was hoping earnings would pump it to like 26. But he did not get that pump that he wanted. Chris says, I think there was a selling floor because of institutional buying. Fintel graph shows a continuation of buying pounds here. Yes, that's also true. I mean, I think now we're at 40-60 officially on institutions versus retail. That's still too much retail. I mean, 60% is a lot of retail, right? But still, even if Thiel sold 7 million shares, if the institutions were willing to pick those shares up, again, it's liquidity for him, which is not that big of a deal. And he still has a ton of shares left. People were also saying about Vlad. Vlad sold 250,000 shares yesterday. Vlad sells 250,000 shares every other month. He has 53 million shares. He owns 6% of the company. So a lot of the people that see these sales, sometimes you have to go a little bit deeper and be like, is this scheduled? Why is it always 250,000? How is it going down? And when you look into it, it's like the guy has a lot of shares, dude. It's, almost 55 million shares. The incentives are definitely there, but he's going to be selling periodically because that's just what insiders tend to do. And it's always 250,000. So it's not like based on the price. It's just whatever the price is. It gets executed. So Robinhood goes red right now. Again, Robinhood price action, I think, is primarily dictated off the market doesn't believe that this quarter is repeatable. I think that's okay. In 90 days, we're going to repeat the quarter to an extent, and I think the market will have to recognize it. But that's the only reason I have for why the market is red. Also, I mean, Bitcoin is still tied to Bitcoin. Bitcoin's still not really doing what we want it to do, right? It fell to 56,000. We want this sucker to be at like 70,000 one day, or like soon, because it was at 70,000 a couple weeks ago. So until Bitcoin gets higher as well, I think Robinhood's going to be in a little bit of a pickle staying at those levels. But I did think those numbers were so incredible that, I mean, it would still pump. I guess the market is just not ready to give it momentum yet. But the S&P, the market's ready to give it all the momentum it wants. 522 on the S&P 500 right now. Clive says the Bears need to solidify NVIDIA up above 900 to push it above 1,000. The Bears need to hold it down below 900. I agree. And May 22nd is going to be a big day because when Jensen reports, dude, the entire market rests on that day. Like if NVIDIA does not show demand is happening, or if they show demand is cyclical, they pulled forward too much demand, or they have supply issues, which I don't think it will be any supply issues. I think it'll be demand issues if there are any issues. Market's gonna have to re-rate itself because NVIDIA is, I think, holding up a big percentage of at least the AI narrative of the market. And the thing is, if NVIDIA goes down and stocks go down, well, then Robinhood goes down as well, right? Because Robinhood is kind of like a call option on the market. So NVIDIA affects everything at the end of the day. So we definitely need to make sure NVIDIA does a good one. Palantir is definitely going to take a hit if NVIDIA goes down. So hopefully NVIDIA has a good earnings. NVIDIA right here at 905. It seems like the market is definitely bullish for them. Meta 476, Microsoft 414, Apple 184. Apple still maintaining the earnings pump. Tesla 171. We'll talk about Tesla in a second. And then Amazon back to all-time highs at $189. Joseph says Peter Thiel's a venture capitalist who needs cash to do the VC thing. That's fair, Joseph, but I think Founders Fund has like billions of dollars of cash that they can deploy. So I don't think he needs the cash to do anything. I think it's a scheduled sale, or it's like a scheduled plan where he's going to sell no matter what to just lock in gains. But the dude, I don't know if the dude needs, first of all, he made 130 million. I think half of it's going to taxes, right? If I'm not wrong, or at least 20% of it's going to taxes. So it's like, like the cash itself, 80 million to Peter Thiel, I don't feel like it moves the needle. I just think they're selling because they have to lock in their gains. But if he actually needed the cash, I'd be kind of concerned about what's going on with Peter Thiel. The dude has way too much money to actually need like 80 million bucks. But then again, who knows, man? Maybe he's building some other startups, or he's investing in other things, or maybe he's building some properties or whatever. But it is weird, dude. If it was outright just like, hey, I feel like selling 7 million shares today, that is weird. I don't think that's the case, given it looks on the doc, it's a 10-5B1 plan. So likely more scheduled approach to selling. And NVIDIA right here at 904. New yacht. Yeah, maybe he needs a new yacht as well. If Jensen doesn't give the best guidance, it's going to absolutely tank. I agree. And so that's another thing I think the market has to reconcile with. Again, guys, I know Robinhood price action sucks. I'm sorry. I'm really sorry for that. The only thing I can say is, as investors, we don't really control the stock. We do control our analysis on the company. And I think everyone can admit, like, this was not a quarter where you can find red flags in the numbers. I mean, the numbers are just absolutely astonishing. So it's one of those things you kind of have to deal with, but I think it's actually good at the end in a weird way, because it forces the company to really prove that they deserve a multiple higher than what it is right now. And it means put up another quarter. And if you're long the company, if you didn't have calls expiring tomorrow, if they have to put up another quarter of this and it becomes undeniable, this thing runs really quickly at that point, because then the market realizes what they've missed out on. But I cannot come up with a reason for why the market's upset. I know in Meet Kevin's video, he said the market's scared the SEC is going to take away crypto. That's not happening, dude. Like I did a decent amount of research on the Wells notices, and I looked at other things that have happened. They're not going to ban crypto from Robinhood. It's just not happening. So if that's not happening, then what are we talking about here? That's not a real concern. However, if the market thinks that's a real concern, then this is Coinbase back at 30. I mean, let's go back to Coinbase's chart. If we go back to Coinbase over the past year, $46, even further out, look at this, 31. This is when the SEC sued them. I remember listening to an All In podcast the day like the SEC sued them, and they're talking about this. $31. It took a while, and then look, even 6 months later, it's only at 54. You know, and Coinbase fell down from 250, just to give context, right? This is kind of like Robinhood going from 6 to 17, which is where we're at right now. It took a while, and it was kind of flat here. And then once it bottomed at 46, so not even 51, it went right back down to 46 when it got to 51. So it went from 31 to 41 in the course of 7 months. Then from 46, it goes to 114 in 1 month. 46 in June, 114 in July. Now it's at 211, but within 1 month, it 3x's or 2.5x's. And within 7 months, it went up 2% or about 4%. So I think this might be a Robinhood trajectory. We're at what? We're in May. Let's say until November, we stay flat, or not November, probably August. August is their Q2 earnings. So that's what? June, July, August. So about 4 months, we stay in this 17 to 20 range. And then once you have the banger quarter, and then, you know, maybe Bitcoin shows momentum, it's just a straight alley-oop back here to this 114. For us, it would be probably like $30. If that's what happens to Robinhood, I think this is going to be one of the best buying opportunities, right? And it's just a question to see if that happens. My average cost for Hood. So on one of my options, so on my actual like shares, it's like $18.30 on my actual shares, and on one of my option plays, it's $14. And then on the other option plays, it's like $9. So there's two set of options, 2025, 2026, and then there's the actual shares. The shares I started buying, you know, last quarter, so that's why the shares average is a bit higher. But on the options, which is like where like kind of the real money is, it's a pretty good average. We just need this sucker to go a bit higher so that it can get really fun. Oh, by the way, guys, I'm pretty sure. Let me text him just to make sure. Let me text him just to make sure if he's. We were gonna have TJ come on today on the market open, and we were gonna do our podcast literally on the. Oh yeah, so he knows. Okay, let me just text him to make sure. Yo, you still good to come on in 20 minutes? So I can't do the actual podcast today for a TJ with a wheeling options. So he was going to come on at the end of this market open, which is going to be in 20 minutes. And he was going to stay on. And we did a lot of moves this week in the portfolio. So we were going to do the TJ wheeling options on this podcast or on this market open. So as long as he's still good to come on in 20 minutes, then he'll be on, and we'll be on for like another 45 minutes and discuss everything from an options perspective as well. Oh, TJ, you're right there. Thank you, TJ. You're in the chat. All right, TJ. So hop on in 20 minutes and we'll have you on at 10 a.m. And for those that haven't checked out me and TJ's podcast before, you guys will get a chance to see what he's doing in the options market. A lot of plays. He had a bunch of puts on Robinhood, Shopify. We had a ton of different movement in his portfolio. So we'll discuss all of that. All right. S&P at 522, Netflix 623, Amazon 189, Apple 184. Hims. This has been an interesting stock. TJ made a bunch of moves on Hims. We'll talk about this one. Chris had a nice kind of conspiracy yesterday on the podcast yesterday, or the market open, where he was like, I think the Hims guy is trying to get access to the Muslim population and like he's trying to like appeal to Palestinians to like do marketing. I thought that was a pretty interesting theory. Don't know if I agree with that, but his argument is like, look, he has a Jewish wife, so he can constantly say he's not anti-Semitic. And then if he says some stuff that's pro-Palestinian, he gets access to all these articles and blogs that are talking about him. And then all these Muslim countries potentially know about what HIMS is. It's a very conspiratorial thing about why he did what he did. I thought he did what he did just because he was like, he loves politics and he feels like talking about it. But if he did it for marketing, it would be really interesting because, you know, and maybe I shouldn't put it past people to do stuff for marketing because everyone's self-interested. But if he did it for that reason, maybe that's another way for them to target the Muslim people of the world that need, you know, dick pills. But I don't know if that was the case. That would be pretty interesting. Okay, let's get an update on Tesla. So Elon said a couple of things over the past couple of days that I thought were really interesting in regards to Tesla. Obviously, the SEC is suing them with this security fraud thing around misleading investors about FSD. I don't think that's actually going to play out. But here's what Elon said this morning. Just to reiterate, Tesla will spend over $500 million expanding our supercharger network to create thousands of new chargers this year. That's just on-site and expansions, new sites and expansions, not counting operation costs, which are much higher. The reason I think he put this out is because a report came out about BP trying to buy a ton of Tesla superchargers, or trying because, so this is an article here from Reuters, BP looks to expand EV charging unit in US after Tesla disbands supercharger team. And so a lot of people got scared yesterday of like, well, wait a second. And we do know the supercharging team, a lot of them got fired from Tesla. That is real news. That's not fake. And so why is BP trying to buy some of their business? So BP spokesperson said, we are aggressively looking to acquire real estate to scale our network, which is a heightened focus following the recent Tesla announcement. BP almost realizing, look, Tesla superchargers, as you can see right here in this chart, they're massive. What if we could expand our EV supercharging focus by potentially buying up some of the people that have been let off the team and also buying up some of the real estate that might not be needed anymore for Tesla, which is why Elon comes out with this yesterday and says, actually, no, we're going to spend a lot of money, and trying to kind of replay the narrative here in terms of what's going on. Let's get Gene Munster on and get his thoughts on what's going on with Tesla and the layoffs and where he thinks this is all is going to play out. One sec. Let me fix this real quick. Okay, here we go.
To leave Tesla since layoffs began last month. But he is the first to publicly offer a less than sunny glimpse into the vibe on site. Should investors, maybe you, view these curtain calls a cause for concern or just somebody writing something on their way out the door? With us tonight for more is Deepwater Asset Management managing partner and Tesla investor Gene Munster. I don't know what to make of this, Gene. You know, it's Tesla, so it gets more attention. Executives leave companies every day. They come, they go. Some of them are angry. Some of them are not angry. Some of them are write stuff. Some don't write stuff. Are we making too much of this because it's Tesla, or because these are really high-level people all kind of at the same time? It is an issue.
Well, I think that we need to take into context that he is saying something. And when you do say something negative against Tesla, you do run the risk of their legal department outreach, which is something that you don't want. So this is a clear sign that there is morale is low, which makes a ton of sense. I mean, how can it not be low? They lost 14,000 of their coworkers. It's understandable. But in a sense, his comments, unfortunately, are overstating the obvious. This is what happens. And a month, 2 months, 3 months from now, the people that are still there will pick up the slack and continue to march forward. And so I was surprised to see the comments, just because it probably doesn't pay to make comments like that on the way out. But I think that they really don't tell us much. I would add briefly that there is a dynamic related to the June quarter, which investors should be aware of, is that the street's looking for a revenue growth of 4%. I suspect that it will be a slight decline. And so we're not out of the woods yet when it comes to kind of returning to growth for Tesla.
So how big of a number would that be?
So it was down 9%. Revenue was down 9% in the March quarter. I mentioned where the street is at the +4. I suspect it's a -3. And that does line up with Elon's comments that he said that on the conference call that sales in June would be a lot better. A lot better. Down 3% is a lot better than down 9%. I think some analysts have taken a little bit of a liberty thinking that this is going to be back in growth. The comps are still hard, but I do expect the company to return to nice 25% plus growth in 2025. That's what you're really owning this for. That's why I own it.
Okay, there you go. Maybe some good news there for Teslarians. I got to switch topics, Gene. According to Reuters, OpenAI, right, the big artificial intelligence.
So in regards to Tesla, it's really interesting stuff. We got Rango here in the chat who says, you know, a lot of this is just rumors running around. We are still working hard on the superchargers. We know Rango obviously works at Tesla. So he's saying that, you know, a lot of this stuff is rumors. And I think that's why Elon tweeted this thing yesterday that, hey, we're spending a lot of money on superchargers and we're working on it. And, you know, it is kind of hard, dude, to trust Reuters given what they said about Elon abandoning the M2. It's like, that's not what's happening from what I heard on that earnings. That's not what's happening at all. In fact, it's accelerating the production of the M2. So maybe it's not getting rid of the supercharging machine. Maybe they fired some people, but they're doing some layoffs, but that's not necessarily getting rid of the entire team for superchargers. By the way, you guys know that physical share I got from Derek? I got the receipt from Tesla yesterday. I got the actual like certification, like the official one from Tesla. And they said my average price is $183. So I hope that one share is worth like $10,000 one day. And I think it will actually one day big into the future. But I have an average price on that physical share of 183. So we'll see. We'll see how that plays out. But in general, I think there is a lot of FUD going on around Tesla in regards to superchargers and the layoffs and things that's going on. The stock has had a hell of a run. I mean, just a couple of weeks ago, everyone, including myself, were talking about the demise of Tesla and that this thing would be at 120 by now. It's at 170. I mean, even if it goes back to 150, it's not at the 138 level it was at where it was just peak fear. And it seems like that was the best time to buy because now you got Tesla here at 170. S&P again, dude. S&P is at 522. What's holding it up seems to be at least some of the big seven. Nvidia right here at 912. Apple at 184. And again, Apple was at 167 not too long ago. So this is actually a nice big bump for Apple. That's definitely helping the S&P. It's now down only 1% year to date. Microsoft at 415 is helping. Meta used to be at 530, fell all the way to 398, now back to 476 very quietly. If we look at their chart over the past month, look at that. 509 falls to 399 and then slowly recovering. That's helping the S&P. Google at 171. Google was stuck at 130 for the majority of this year. Then it broke out on this earnings right here, 152, boom to 183. Now settling in this 170 range, helping the S&P. Amazon, I mean, it was at 165 for the majority of the year. Then it got up to 174 on earnings. Really didn't help because Jay Powell was talking the next day. Now it hit 191 yesterday. So it seems like the S&P is being aided by the big seven, keeping them higher. And if Nvidia crushes, it doesn't seem like the S&P is going to slow down, just given the momentum built in from both those levels. So that seems to be pretty good for both of those, or for the broader index and for the entire market. Let's listen to Dan Ives talk a little bit about Apple. We talked about Apple earlier in the show. Dan Ives is very bullish Apple. I'm not the most bullish Apple. Let's get his perspective. He just believes that betting against them is not the right thing to do. So let's see what he has to say. One other thing before we get to that, TSMC's revenue came out for the month of April and it jumped 60%. So Taiwan Semiconductor, they released kind of these like monthly reports, kind of like Robinhood does. They jumped 60% year over year in April. So that goes to show you that demand is really not slowing down when it comes to the chip space and the hardware space. And also Costco reported April sales of $19.8 billion. Costco is up 7% year over year. So TSMC, 60% year over year growth in the month of April for their sales. Costco up 7%. You look at these numbers just objectively, Costco as a sort of large wholesaler, and then TSMC, AI chips, both doing phenomenally well. Kind of hard to see where like the crazy recession is when both are doing as good as they're doing as well. And also before we play Dan Ives, let's listen to Sundar for 40 seconds talk about Microsoft because we were talking about Google. Here's what he has to say about competition with Microsoft, and then we'll get to Dan Ives on Apple.
Microsoft is obviously making huge investments in AI. We've reported that their OpenAI investment was actually in part because they were worried about Google and wanted to catch up. How do you feel about the competition?
I've always held the view if you're working in the technology space, there is a lot of competition. We see it all the time. The way you stay ahead is by innovating relentlessly. It has to be true all the time. It's happening at a faster pace, but technology changes tend to get faster over time. So it's not surprising to me at all.
Microsoft CEO Satya Nadella has had some fighting words.
I hope that with our innovation, they will definitely want to come out and show that they can dance. And I want people to know that we made them dance. And I think that'll be a great day.
Who's really choosing the dance music?
I think one of the ways you can do the wrong thing is by listening to noise out there and playing to someone else's dance music. I've always been very clear. I think we have a clear sense of what we need to do.
So you're listening to your own music.
That's exactly right.
I actually like that answer, dude. I saw a lot of confidence there. He's just like, he could have been a little more arrogant or stuff, but he was the right type of just like confidence, wasn't too mean, and just like, nope, we're doing what we got to do, and no one's going to stop us. Here's Dan Ives on Apple.
Look, I think it shows this revolution, the monetization is actually now starting. And it's not just about Godfather of AI, Jensen, NVIDIA, and what Nadella is doing to Redmond. Now it's the rest of tech. I think names like ServiceNow, Salesforce, Oracle. You look at ARM Holdings. Those are just robust numbers. You're seeing it play out across other areas, Palantir, SoundHound, and what I believe is going to be the rest of software and semis. I think this fourth industrial revolution has begun.
How can investors best determine a healthy amount of spending on generative AI ambitions versus what seems unhealthy or perhaps over-indexed capital allocation?
Look, if you look at these hyperscale players, Microsoft, Amazon, Google, and then you analyze some of the spending that we're seeing from Meta and others, it's just begun. We're not even in first inning. I'd say we're in the dugout in terms of where the
GameStop's up 6%, guys. I guess some fun little stuff is going on in GameStop. I'll try to get some GameStop stuff in a second, but we'll keep listening to Dan.
this is all going. Now, in terms of over-indexing, I think you have to own the right plays. I think you have to have your plays in semis, software, and infrastructure. And I think there's almost a basket approach to this. But even if someone told you 6 months ago Dell would be an AI play, you'd say, okay, you must have had a really good Friday night. But look what's happening. Look at Dell, Oracle, and others. This is a 1995 moment, not a 1999 moment.
Dan, one of the names that we've been talking about a lot when it comes to AI, at least most recently, not so much here over the last several months, but most recently it's been Apple. Questions about what exactly their AI strategy is going to look like. We're expected to hear a little bit more at the big event next month, but I'm curious from your perspective, what do you anticipate to hear from Cook & Company in terms of what their strategy is going to look like?
Look, I think it's probably the most important event for Apple that we've seen potentially in a decade. Because this is going to be Cook laying out the AI strategy on the services side for developers, what I believe is really the start of an AI app store in terms of how that's going to morph. And then it's proprietary AI technology in iPhone 16, which will launch in September. Look, behind the scenes, were they behind when it came to AI? Yeah, but I think they've quickly caught up. And you have the best install base, 2.2 billion in the world. So this is the start of AI coming to Cupertino.
Does this compactor ad matter, Dan?
Look, first of all, for Apple to actually apologize is rare. But I think it also shows they're under the microscope.
I agree. And I agree with Dan here that they're so scared that they have to apologize, which isn't the best thing, but it is what it is, right?
Brussels, Beltway, Target on their back. But when you make the best products in the world and you have the spotlight on you, that's what they're going to do. And an ad like this, I wouldn't expect too many more of these. But Apple's apologizing for the best products in the world. And that's essentially what they're doing.
Okay, so Dan Ives is bullish on Apple. We'll see how that plays out. TJ is going to be on in a couple of minutes, and we will do our podcast for Wheeling Options. So for those that care about options at all, you can stick around for that when he jumps on in a couple of minutes. GameStop surging right now at 8%. I have not been keeping up with the GameStop story too much. I know last week it was up 50%, and I honestly, dude, over the weekend I had no time to look into GameStop this week. You guys know I kind of had very little time to look into anything going on besides Palantir and Robinhood. So this is the first time I'm really getting a chance to look at this. I'm going to try to do some research today around what is going on with this. First of all, let's just do some very basic due diligence and look at the short float on GME. So GME, and the new numbers came out yesterday, by the way. So we do have new numbers on this. 24% of the company is sold short. That's a pretty decent amount. That's not a small amount. That's not like 40%. I think that's what it was back in 2021, but it's definitely a lot. And the question is, who's creating this momentum? Who is the roaring kitty that's creating the GameStop short squeeze and kind of riling the troops? So let's do another basic piece of due diligence. Let's go to youtube.com and let's type in GameStop stock. And let's just see the first video that comes up. GameStop stock. Okay, so this is actually a big channel, Dead Inside. I've known them for a while, so they're talking about it. The Masked Investor, this seems like a new person, 2.6 thousand views, 3.6 thousand. Sleepy Bear, some random dude, an insane move is coming to GameStop stock. This is what we're seeing, dude. We're seeing different pieces of momentum. Wait, Roaring Kitty was back on Twitter yesterday? No way. No way. He was back on Twitter. He was back on Twitter. Wait, can you send me the post? Did he tweet something? Did he like something? Because I don't think I follow him on Twitter. I have one account, but this account is 400,000 followers. I don't know if this is the exact one. No, this is the exact one, right? This is the account, right? Look at this one. He liked a post. No, but it says his likes are only from. Look, his likes are. Yeah, his likes are. Did he unlike it? His like is from February 14th. What is the best movie you've ever seen that takes place in real life? Okay, interesting. That's interesting, dude. If he's back on Twitter, that's interesting. Because again, when you see random people, so look at this. Look at the views and the videos came out. Look at this. Each of these videos are getting a couple thousand views and they're from new accounts. And so when you see stuff like this, you start to realize there's more people that are trying to potentially rile up the troops and get people excited. We saw this happen in 2021. Oh, post was from February 14th. He liked it yesterday. So let's go back to the post then. Let's go back to the post. The post is, what is the best movie you've ever seen that takes place in real time? So Roaring Kitty is back the same day that the Planet of the Apes drops. Wait, there was a movie that came out yesterday? Kingdom of the Planet of the Apes? Kingdom of the Planet. Dude, I feel like I'm a fucking Sherlock Holmes right now. Wait, what? There's a movie that's coming out today? Yeah, look at this. Kingdom of the Planet of the Apes. Did anyone know about this movie? Is anyone watching this today? I didn't know this movie was coming out. Okay, so we got Kingdom of the Planet of the Apes. And then we have Roaring Kitty liking a post the day the movie comes out. Huh. Interesting. Very interesting. Eeyore says this is the worst DD you've ever done. Dude, it's GameStop. Are you kidding me? Like, I don't know. There's not that much DD you can do on freaking GameStop. The company is absolutely dead. It's a stupid company. It's a stupid stock. Like, we all know this. Like, if you've done any look at that, they don't even do an earnings call, dude. The management knows how dumb GameStop is that they don't even talk to their shareholders. Like, it's absolutely ridiculous. So this is the kind of DD I think you have to do to try to get any insight on what we got with GameStop. But that's interesting. So you got GameStop here up a bit on the day, 6.59%, 24% sold short, up 74%. I am not touching this. The reason I'm doing this DD is just trying to make sense of what's going on. I'm not touching this at all. Could this thing squeeze? I mean, look, dude. Yeah, I mean, it happened once. It could happen again. I wouldn't I wouldn't count it out from happening again. The question, I didn't even send TJ the link. Sorry, TJ. One sec, sending now. I just thought TJ would magically show up with his options. I'm like, oh, here you are. It could happen again. You never know. It could happen again. I think there would just need to be a lot of momentum, and social media would have to like really have that have that go down. But I guess we'll see. S&P 521. Robinhood's red for the day. Where's SoFi? How bad is SoFi? $7. Okay, SoFi's down 1%. I don't know what the hell SoFi is going to do to get this thing to pump at this point, dude. I don't know. I don't know. And just to to compare them against Robinhood, when SoFi's earnings came out, one of the things I said, which was very bearish to me, was why are these guys only getting $3 billion in deposits in 90 days? Guys, Robinhood got 11.2 billion. I mean, we have to talk about that. Like, there's 11 billion on a tiny brokerage meme trading app. There's 3 billion on a bank that has everyone with 90% direct deposits. By the way, good friend of the channel, I'm going to do a live stream with him soon to kind of get his thoughts on this. We have a new bull who likes Robinhood, and his name is Mr. Future Investing. Tanner is officially a Robinhood shareholder. So even Tanner, who I respect very deeply in the fintech world, he said, I'm a Robinhood shareholder, dude. Those results are so amazing. I can't deny it anymore. You know, it's kind of funny, guys. I was watching a podcast between me and Tanner from July 2023, and it was about SoFi versus Robinhood. If anyone wants to check it out, just go search it up. And it was so funny because we were talking about the bull and bear case. And it's like, I was like, dude, I think this thing's going to work. And he was just like, it's a stupid little broker trap. And it was so funny because I was watching it the other day and I was like, damn, we were like really trying to philosophically think, can Robinhood compete with SoFi? And a year later, this guy's like, I'm buying Robinhood. And it just goes to show, I think it goes to show product matters, art matters, talking with your investors, AKA Vlad being gracious enough to talk to me like he's talking with CNBC matters. And that could result in a stock that ends up, potentially doing well. So I'm happy that Tanner's on the bandwagon as well, because if he's in fintech, he knows how hard it is to get customer deposits. He knows how hard it is to get clients, to get people to use your app. And if he sees that Robinhood's executing, then maybe that's worth putting a position for Robinhood as well. All right. Now, this is the end of the market open. If anyone wants to leave, that is fine. Thank you all for being here. We'll be back for Palantir Weekly probably tonight. If not tonight, then we're probably going to do it tomorrow. Arnie and I are going to head to New York. But for those that want to learn about options, I've got my good friend here with me as well. And we're going to discuss what has happened in the world this week for options. TJ, what's up?
What's up? How are you guys? Good morning.
Good morning, sir. I can tell you just woke up. I can tell you got the 5 o'clock shadow. You're getting ready. Did you have coffee yet?
No, dude, I don't do coffee, dude, and I'm approaching 50. I feel like that's something that should be on the to-do list.
So wait, how do you wake up in the morning? What do you do to get up?
I bother my wife for sex, bro. Usually doesn't work. Dude, here's the quote of the day. I mean,
oh my God.
ABT. You ready?
Yeah.
Always be trying, bro. Always be trying. You never know. You never know when she's gonna say yes.
Oh my God, that's hilarious. That's hilarious. Okay, so dude, this was a big week for options. You had Palantir options, Robinhood options, Shopify. We did a little fun stuff with Shopify. So I'm gonna pull up the portfolio, and I guess you can do a little overview. You can take whichever stock we can talk about Palantir first if we want to get into that, and go from there. See what's happening.
Which one do you want to start with?
Let's start with Palantir because you had a lot of money.
I think what we should do though is rewind the tape a little bit and tell them how this happened. Okay. So obviously, I sell puts, I sell calls for a living, guys, and I roll when it's necessary. That is the general basis of what I do for a living. But I reached out to Amit because we'd done a few podcasts before, and I saw that Amit had a $500,000 paper trading account. And I'm like, Amit, you ain't gonna learn shit paper trading, $500,000. So let me allocate a portion of this portfolio, and we can do it with real money in real time, so that I can legit feel like you're gonna learn how to sell puts and sell calls, because you're gonna deal with the human element of it, the emotional element of it. And we allocated $100,000 for you to work with.
Right.
But I want to interrupt your regularly scheduled program, Amit, because I've studied the stock that we're in, and $100,000 isn't going to be enough, brother. We're going to need between $250,000 and $500,000 to go to the levels that I like to deal with, because I don't want to make money. I want to make a lot of money.
Wait, so are you saying right now, live breaking news, that you're giving me $250,000 of your money to manage?
No, I think that we need to use $500,000.
Okay, that we got to ring the bell for that.
Well, we want to match the bullshit that you were trying to do with the paper trading account, right?
Yeah, I like that.
These are real Benjamin Franklins here, though. So
this is cool.
Anyway, so now I don't want you to be playing like a little scared pussy, bro. We're going to try to make money. We're going to sell cash secure puts, covered calls, roll when necessary, and we're going to do it on high conviction stocks for you and for me. Because if I don't like the play, we're not going to fucking do it, dude. That's the reality of it.
Yeah. Yeah.
So I don't want you to feel that kind of pressure, dude. I'm a grown ass man. It's just like when I got real excited about Enphase. You know, Vitali and Carlos are they're super excited about Enphase, but I never borrowed their conviction. I only used their research.
Right. Right.
I don't even have Vitali's phone number, guys. I don't bug Vitali. I communicate, I correspond.
Don't worry, you don't need it because randomly he'll text you in the middle of the night, happy birthday. And I get this text and I'm like, dude, it's not my fucking birthday. He's like, I heard it on the chat. I'm like, Vitaly, you're supposed to know my birthday. You're supposed to know my own birthday.
So anyway, now we have $500,000 to work with, bro, because I'm legit excited about Robinhood. I mean, dude, if you don't think that Robinhood's earnings were fucking amazing, you need to go read a fucking book. You know what I mean?
What was your raw reaction when you saw the numbers?
Dude, I was just like, dude, they're everything that I'm hoping SoFi will be eventually.
Yeah.
From not just because SoFi's clicking as far as the company goes. It's just a matter of time before the stock catches up. But Robinhood is clicking on both sides of the coin, right? Like they've got the stock on one side and they've got the company on the other side. And the people that are saying the stock's not performing, I mean, dude, it's trading at a pretty lofty valuation. It's not like Robinhood's not getting any respect from Wall Street. So
So now I have 500,000. So we're not going to make any plays today because I haven't even thought about allocating that much capital. But over the weekend, I'm going to.
Well, I've already made some plays for you. We'll talk. So we've already jumped the gun a little bit. The thing about having money, guys, you got to learn how to allocate it, and you have to learn how to deploy capital, even when it's not the best of scenarios. Because we're going to sit there and wait for the ideal entry point. You're going to wait for the beautiful girl at the club at 1 o'clock in the morning, and she's going to be a little bit tipsy. And you're like, this is my best chance to get lucky tonight, bro. Somebody already took her home. You follow me? You're going to have to manufacture the win along the way.
So I'm going to write down the moves you made today so we can calculate how much I have left to work with. And then I'm going to actually sit down.
Well, it's all on the tracker, bro. I'm doing all this work.
Okay. Okay, cool. So you got to share that with me because I'm going to try to sit down and see how can I realistically make a plan to allocate that much money. Now, here's a question I have for you. Let's say there's no need to allocate this all in a month, right? We can take our time and deploy this kind of strategically. Yeah. Because if there's not good opportunities, there's not good opportunities. Yeah.
I mean, the thing is you want to sell cash secured puts first and foremost on a company that you legit want to own at some point, because more than likely that's going to happen. You're going to get caught with your hand in the cookie jar.
Yeah.
And so let's walk through your plays specifically, and we're gonna go one at a time. We're gonna start with the first one that you introduced to the channel, and that's Shopify, correct?
Yep.
So the beautiful thing about this app on Robinhood is it tells you what's going on here. We have $176,000 in collateral, so you already see that 176 of the 500,000 is spoken for.
Got it.
So walk me through that scoreboard, Amit. What do you see? So you see Shopify. And you see two strategies. You want to walk the audience through those two strategies. What do those two strategies mean to you when you see that?
So first off, we had $65 puts, guys, on Shopify before their earnings. TJ actually closed them a day before. So we aren't negative on those puts. We made 80% of the premium that we
kept. So it's right here.
Yep, there you go.
So go ahead.
So we thought Shopify would do well on earnings. It didn't. It tanked 20%. I think a bit of an overreaction, but whatever. TJ closed out 80% of the win. And the reason for that is because, there's only a couple $100 left for us to win. So there was no point to keep the options open. So we did that. And then over the past 2 days, we sold 20 $60 puts.
Yeah, so we did 5 cash secure puts on May the 8th for $59.
Okay.
You guys will see right there. This thing tells you everything. This is the entire history of Shopify. So on April the 12th, we sold 5 cash secure puts, $65. We collected $12.60. Then on May the 6th, I closed them out and I gave back 260 of those dollars. So we locked in $1,000 profit. That's a realized profit.
Right. And then we sold 5 contracts for $508.90 in premium, $59 puts, then 10 contracts, $60 puts, 5 contracts, $59 puts.
No, so these here I bought back. So these cash secured puts at 59, I bought to close them back for 43 cents a share. So that was another realized profit right here. You subtract the 215 from the 590, and this leaves us with our open positions, which are the 10 contracts I sold at $60 expiring on 531, collected $2,000 on those. And then I sold an additional 20 contracts at $58 a share, expiring on 524. The reason I'm getting more aggressive now, Amit, is why do you think that I'm willing to sell more contracts at these levels?
My logic. Well, my logic is because Shopify fell 20%, you're assuming the bottom is in, and it's going to be really hard to fall another, 7-8%. It's possible, but the market usually tends to find a little bit of a bottom. So if you can get a little bit lower than where we are right now, you might be able to collect some juicy premium from that.
So whenever you first introduced Shopify to the channel and to the equation, specifically to me, because Shopify was kind of on the radar, but not really. I had spoken to one other guy about Shopify before. This is in June of 2022, whenever we're scouting Pebble Beach for our wedding destination, because he was in Shopify. And I thought Shopify was extremely overvalued. So whenever we were looking at the market that Shopify was offering to us at the time, we landed on $65 because Shopify was probably in the $68 to $70 range.
Right.
So we wanted to get premium, but we didn't want to get stuck owning Shopify at too high of levels. But I had already decided that 55 to 60 was where I'm really willing to dance with the stock, preferably in the 40s. I don't know if the market's going to give that to us, though.
Correct.
I know how to manage some trades. So I'm like, well, let me just, dip our foot in the pool, if you will, or whatever the sayings are, right? Tip your toes in the sand and just kind of test the waters. We tested the waters at $65 and we made $1,000 for testing the waters. This is a testing waters trade right here, guys. And then this was, just another opportunity to cash grab. But now this is when we're serious. This here at $60, now we're serious. And at $58, we're really serious because I don't mind getting assigned these shares. Over here, zero intention of getting assigned these shares, but 100% intention of making money.
Right.
See, there's a big difference, guys. You see, I want to debunk some myths with wheeling, because a lot of very amateur wheelers are going to say things like only sell cash secured puts on stocks that you want to own. I used to say this shit too. It's in my book. You follow me? Only sell cash secured puts on stocks that you want to own at prices that you want to own them. And that's all fine and dandy if it gets to your actual price target. But sometimes the market's not going to give you that because the market's forward looking and forward thinking, and stocks tend to be a little bit overvalued in general from a value investing perspective. So you got to be willing to tip your toes in the water and understand that you can roll out of these options if necessary, if the stock approaches the price that is more attractive to you. And that's exactly what happened with Shopify, because that's why you didn't want to go heavy. You remember over here, Amit? You didn't want to go heavy because you didn't know what was going to happen with the binary event.
Well, which was kind of right? Because I wasn't that
out,
sure.
didn't it?
Yeah, I wasn't that sure if Shopify would have good earnings, and they didn't, Or they did, but the market didn't respect it.
Right, but we're working this as a team. So I saw that it made no sense to leave this $32,000 or $33,000 in capital, whatever that ends up being. Like, why are we going to tie it up through all of that uncertainty when we could already lock in the meat, which was $1,000 in profit, and then we could just chillax through the earnings, and it's going to play out the way that it's going to play out.
Right, because the premium was $1,250. So at best, we were holding up $30,000 for $250, which makes no sense.
Mathematically, it doesn't make any sense. The risk reward is not in your favor.
Right.
So that's an important lesson for you to learn, dude, is see profit, take profit. That's the teaching segment there. Let the uncertainty play out. Now we have more certainty. Now Shopify is trading at a more attractive valuation. Is it a good valuation? I don't think so. I like $55. I like $50 better, but that's not where the market is right now. So we're going to position ourselves here with the understanding that if this shit goes against us, now we're really going to get serious at $55. That's when I'm like, okay, give me those shares, and I'll write those shares back up from 55 to 70.
Right.
Because now I can get paid on the cash secured put premium, the covered call premium, and the capital appreciation. Those are the three ways you get paid with the wheel strategy. If it's a dividend paying stock, that's the fourth spoke, and that's obviously the dividend that you would qualify for.
Right. So we put up 176 grand and we collected.
So I'll look at the wheel tracker here in a second, but right now we have open options and we collected $3,040 on those open options.
Okay, so 3,000 divided by 176. Basically, we are getting a 1.7% premium in about 2 weeks, which is not bad at all. So 2%
For
in
the
2 weeks.
524, but then we have the one for 531. So this one's
531.
closer to 3 weeks.
Okay, cool.
So it's not the greatest return, but at the same time, becomes now a higher conviction play, and it's a lot less risk because it already tanked about 15 to 20% after we did this.
And the actual earnings themselves, I don't know how deep you went into them, but they were phenomenal.
Pretty decent.
They're pretty damn good.
Decent. The guidance was a little light.
Yes. And that's a trend we're seeing in a lot of companies. Guidance is light, so the market tanks them. Now tanking 20%. Is that justified? Probably not. But it was good earnings for sure.
Right. So that's Shopify. So now I can go over here to the wheel tracker because I'm tracking all of this stuff for you. So here you'll see that this is the play, row 37, and you'll see the $1,000 in profit. Like this all played out, right? So on 412, we sold this cash secured puts, 5 of them. We collected the 1260. On 516, I gave you 52 cents back. So that's the debit of 260. So the profit legit realized is $1,000. We're in and out. Do you see how all that played out on that spreadsheet right there?
Yep.
Yes, and sir. Then we have this was the TSLL play. So these are all the plays. So we can do a recap real quickly. And maybe that's how we want to start all of these. So we can give a recap of all the plays. And then remember that TSLL play where I did I thought it was a good idea to sell 50 cash secured puts on TSLL at $6, collected $1,300. It was going to be an expiration date of 4/26, so an 11-day trade, and then the shit went against us, and we had to roll. Remember that?
Yeah, and then Tesla did well, and it worked out.
Well, after, but initially it didn't. We had to roll down, and we had to go out like a month, and we went from $6 to $5.50. And you'll see that we had to give back money over here on the cash secured put, but it worked out because whenever we rolled, we got more money than we gave back. So we were able to take risk off the table. And then here you just got to keep looking at the profit. So we went to $1,000 profit. We lost $2,200 on the roll, but then we got it all back whenever Tesla shot back up after earnings, right? Elon Musk and that whole deal on 8 and that whole thing with robo-taxis. So Tesla goes up, and then we're able to close that TSL put, and we lock in 3,200 there. But you subtract the 2,200, and we made another grand there on TSLL, and we're out of there. So you're already seeing a realized profit of 1,000 and another 1,000 here if you do the math.
And we started this like a month ago, so we made $2,000 in a month so far.
Right.
Not too bad.
So then enter Hood. This was my play, but it was you brought it to the table. But I was like, dude, this dude's like excited about these debit spreads that you got going on because that's going to be your lottery ticket for your life. And I'm like, well, let me tap into that conviction and that research. So I dabbled, and then we sold the 10 contracts of Robinhood at $17, collected $920 for a 5/10 expiry. So on 4/20,
that's today.
5/10 expiry, but I already closed them out because after earnings or leading up to earnings, Robinhood was going in the right direction, correct?
Right.
So I was able to give back 130 of those dollars for another realized profit of $790. And then on 5/7 sold the 3-day contract at $16. This is again on Robinhood. Collected $360, and then we closed them out for $30 on another realized profit of $330. So that's another grand. So we're already at $3,000. You follow me?
I follow you. That's pretty good. So can we go to Robinhood on the actual account and just show people what it looks like?
Yeah. So then here we're going to go this guy here, tab, and then we'll go Robinhood. So this is Robinhood. So the scoreboard on Robinhood is such. We've got 41,250 in collateral. So you add that to the 176,000. So we're at about 210, give or take, in collateral.
Yeah.
So we've got 25 cash secured puts right now sitting for 531 at 1650 strike. And right now the value of that option is 62 cents. I collected on average of 49 cents. So down on that option because Robinhood keeps tanking a little bit. You follow me? Robinhood's at 1705. When I did this, Robinhood was at like at 1730 or 1740.
So what is the strike on our 16.5? Okay.
16.5. And then here is the entire history of Robinhood so that you guys can see that the spreadsheet is accurate. Because we want to do full transparency on here because nobody does this kind of shit. So you'll see the 920, the 360, where I gave back the 30, gave back the 132. If you see sell here, that means we're collecting money. If you see buy here, that means that I'm paying back premium. Just so y'all understand how to read the scoreboard. And then these are the new trades. This is selling 20 contracts at 16.50, but then I wanted to average down because I already saw that it was going against us. So then I did 5 more contracts and collected $59 a contract, and that's how we get to where we're at right now.
Okay, so Robinhood is becoming one of the sort of cornerstones of at least my 500K that I'm wheeling.
That's right. Correct. So how do you feel about it? How do you feel about having 25 cash secured puts at 16.50? I mean, dude, you just talked to the man yesterday. I saw on your channel, and Vlad was on there, little spiffy haircut, looking all dapper and shit. And he looks pretty fucking stoked. He's obviously showed how fucking nerdy he is with the type of shit that he watches to get pumped. Bro, have you fucking heard of Metallica? You know what I'm saying? Like, this motherfucker's geeking out. Typical Stanford bullshit. Geeking out to shit that I've never heard of, by the way. I know that you hadn't. If you hadn't watched Back to the Future, no chance in hell you'd watch the other shit he was recommending. And I'm like, dude, bro, like, I mean, have you ever heard of Metallica? Have you heard of AC/DC? You know what I'm saying? Like, that's the shit you want to hear to get amped up. And you're young and maybe you probably don't know what the hell I'm talking about.
No, I know those two bands. I don't listen to them.
They have good shit that gets your endorphins going. Not some geeky ass shit, but I mean, that just shows how much smarter he is than me.
I feel very comfortable with the position. If we get assigned the shares, I feel comfortable. This stock should be like $28, $30. This is a misproportionate. It's a disproportionate mispricing by the market. But I asked him this question. I was like, yo, I think the market, I didn't say I think the stock's down, but I said I think Wall Street's struggling with the sustainability of this types of a quarter, of these types of numbers. And he basically said, look, I get that, but we're well diversified. And we already told you we did half of all of our main metrics in April. So if we just kind of execute for the next 2 months, and the way he sounded listening to this fucking crazy Wes Anderson soundtrack music, like, who does that, right? Like, I had the same reaction as you. Like, this guy is not fucking around here. I think he realizes this is his moment to make this company what he always dreamed it could be. And it's getting to that point. Dude, they're getting $1 million per employee, average revenue per employee, because they cut employees last year and they grew so much. Like, they're at a prime spot. So I feel comfortable owning a lot more shares and having a lot more puts. The one risk to the strategy is if the market really tanks or crypto really tanks, Robinhood, is going down the drain. But I don't think that's the case. And if that's not the case, then I think we should be all right.
So here's the thing. Let's talk about that. Everybody always says that that's the downside to selling a cash secured put. So
well, that's the downside to Robinhood, in my opinion, because it's so tied.
No, but I'm saying, like, selling cash secured puts in general is, oh my God, the stock could tank. And now what are you going to do? Right. If we already owned the shares, and if the stock tanks, what are you going to do? You're riding the fucking roller coaster, bro. That's the reality. The only difference is I don't own the shares yet. I'm just committed to owning them.
Right.
But at least I got paid for that commitment. What are you getting paid for bag holding?
Nothing. Yeah.
So to me, I'm better off getting stuck with getting caught with my hand in the cookie jar via a cash secured put, because I don't own them yet. So it's just a paper loss, if you will. The same ways that if you own the shares and it goes down, whether you're just gonna have to wait for the bounce, you're gonna probably have to average down there if you have the money, and then you're gonna try to ride this shit back up. If you have over 100 shares, you're fortunate enough to where you can maybe generate revenue by selling cover calls against your shares.
Yep.
So there really isn't a lot of difference. It's just a matter of perspective.
Agreed.
But dude, I like it at 16.50. I did some valuation metrics on our beloved Robinhood though. And I'm telling you, bro, 15 is where we want to load the boat. 14 to 15 is where we want to load the boat.
I agree. It's at 16.97 right now. It's having a tough day. Might have to roll some of the
ones
I
you
got
have.
a roll, bro. I'm looking at adding more contracts, bro. Again, you're no longer allowed to be this pussy ass mentality. We're done with that shit. This is the big leagues. You're gonna learn how to make money. And the way that you got to learn how to make money, look at me, Amit. The way you're going to learn to make money is you got to be willing to go fish where nobody else is fishing so that you can eat how nobody else is eating.
That's fair.
The market is telling you to go do this, bro. They're fucking stupid. Don't go do that. Over here is where you make the money. That's why we're referred to as dumb money in general. What I'm telling you is that dumb money doesn't have to be that dumb.
I agree. All right.
So keeping it going. Which other one do you want to do?
Palantir. So what did you
do
do
this morning? Because my wife said no. You follow me? So there's a lot of pent up energy there. I mean, come on, y'all ain't gonna get this comedy anywhere else. You want to talk about your beloved Palantir? This isn't one of your trades, but let's talk about this one.
Yeah, what'd you do going into earnings, and what'd you do after earnings for Palantir?
I fucking chilled, bro. I saw it coming. I had my crystal ball. No, it was actually very easy because the market's just been tanking good earnings with mediocre guidance. And I was just like, well, shit, man. I was already in the situation where I could lock in the win. So this thing will work with us here. So I had a lot of money that I had gotten for selling cash secured puts on Palantir at $22. So I started this on March the 20th. Let me look for the original. Here we go. So on March the 28th, they sold 50 contracts at $22, collected 46 cents or $46 a contract, $2,300 total. That's how that scoreboard reads.
Yep.
This was on March the 28th. This was an earnings play. The volatility is high, the premiums are high, and I like Palantir at $22. I love it at $17.50. That is like I have it over here on my board that if Palantir goes to $17.50, it's time to go fucking ham. You know what I mean? But it's not there yet, but it's on its way. You know what I mean? So I'm always cautiously optimistic that my I call them my fantasy price targets are going to hit. Sometimes the market will give that to you, and you got to be ready to pounce. So I got 2,300, then I got 10,050 for selling more cash secured puts at $22 because the premiums were more. They were willing to give me $67 a contract, whereas over here I was only getting $46 a contract. So I did an average down, if you will. And now we've got 200 cash secured puts at $22 and collected about $12,350. Then I rolled those contracts. On April the 17th, I rolled those contracts, kept the same strike price, but I moved the expiration date right after earnings to 5/10 and picked up a cool $22,000 in credit. So you add the 22,000 plus the 13,350. So now that puts me at 35,350 going into earnings and premium. And then Palantir is like tanking, and I said, fuck it, I'm going to buy 5,000 shares outright, and I gave 2047 for those, so 102 grand for those. And then I immediately sold cover calls against those shares because I wanted a rebate, if you will, and I don't want to mess with it. So I did it for January of 2025, and I picked up $9,200 in credit for that. And then I sold more cash secured puts on Palantir at $23. So I averaged up on the strike price, got $77.50. But then Palantir, what happened to Palantir right before earnings? Do you remember?
It went up to 25.30 that day.
It went up a lot, right?
Yeah.
So I decided it's time to take all of the risk off the table, and I gave back $16,400 of that premium so that I can lock in the win, because I had gotten 22,000 and the 13,350 plus the 77.50. So if you do that math and you subtract the 16,000 from it, we can agree that the 16,000 that I gave back is a lot less than the money that they paid me on the front end.
Correct.
It was like $25,700 was the profit, realized profit, and that's where we sit. But then Palantir started tanking. So I said, hey, I'm willing to sell 50 more contracts, but now at $20. So now I'm scaling back into this position, and I want to get it to the point to where I'm willing to do 200 contracts at $20, and then I'm going to manage those. And if it goes south, I'll keep rolling down. My acquisition price target is $17.50.
Yeah.
And if it doesn't give it to me, cool, I'll just keep making the premium.
Right.
So that's what's going on with your beloved Palantir. What's another one in your place? Or do you want to talk about that HIMS play, the in and out?
Yeah, let's talk about hymns. So what are your
thoughts on this as a stock cash grab? How are you thinking about this one?
So Chris Patel was actually messaging me while I was trying to set up this trade. And I was like, dude, this is like a sign from above that Chris Patel, of all the days right now, he was literally messaging me and he was like, hey, thoughts on HIMS for the wheel strategy. So I was just like, well, shit, I'm excited about that. You know what I mean? Like, let me see it. Let me see if I can find it here. So here we go. So he messages me on, here we go. So on 11:05, he's like thinking about running the wheel on HIMS. Any thoughts? I go, I like it. $10 strike. He goes, yeah. I go, is going to sell some puts as well, like 25 to 50 to start. He goes, I think it's such a no-brainer. I go, volume low. He goes, yeah. I go, that's an issue, and it's 5-cent increments. So you can close at like 75% profit, and it's close, and it's the same as closing at like 90, because you got to do these things in 5-cent increments. It's kind of a pain in the ass for that as far as buying and closing. Right. But he told me, yeah, fundamentally, these numbers look good. I go, they really do. And then I told him I like Shopify in the $55 range, but he's not as excited about that one. So anyway, dude, HIMS has Chris Patel's seal of approval, and you know that this fucking guy doesn't like any stock at any price, bro. So there's something about this company that he really likes, and he digs into these numbers.
Right.
Way more than I do. I like looking at options chains and all that stuff. And I rely on my intrinsic value calculations. I have a couple of software programs that I subscribe to, and it tells me that we're good to go. We're good to go. I don't question the research. So I sold 100 cash secured puts at $11. I collected $12.50 and I collected 1,000. And this was on May the 8th. And then on May the 9th, I believe. Yeah, on May the 9th, I gave back $1,000. So I locked in a $1,250 profit in and out in one day.
Oh, really? So do you still have anything open on this?
No, I'm done. I'm done.
Oh, wow.
I'm done. So
wait, how did you lock it in one day though? What did the price have to do to lock it in?
It went up. It went up like 12 to 15% that day, dude. And I just got a notification that your puts have gained 20%. Your puts have gained 50% in one day. Mind you, this thing's a 524 expiry. The math said it was time to get out of there because I already locked in a big chunk of the meat.
Yeah.
So why am I going to leave $110,000 tied up for an additional 3 weeks to realize another $1,000 that didn't make any sense? So now I need HIMS to pull back down so that I can sell these cash secured puts again. Or I have to be willing to increase my strike price to like $11.50 or $12, but I'm not comfortable doing that with HIMS.
Yeah.
I'm just not there. I'm just not there. But it's going in the right direction for me now, right? Because it's down 3.5%, 3.75%. So if it goes back down to like, I don't know, like $12, maybe I'm able to rinse and repeat this trade, but another 100 cash secured puts at $11, and maybe I don't pick up 2250, but maybe I pick up 18 or 1900, and then I do it all over again. But I already have a $1,250 buffer because I realized the profit already.
So right, and I think taking the profits is so important, because if you do make another trade and you're down $12.50, it's kind of like your break even. Let me ask you a question about this. If the trade went against you that day on earnings and it went down, but you were kind of in it for a cash grab, do you think if you get into those situations, you have to know enough about the company where even if it's a cash grab, you're still relatively bullish? Like, what's your philosophy on getting into a cash grab where you know absolutely nothing about the company versus knowing enough to be kind of okay if it goes against you?
I won't do it, and I don't advise it. I cash grab a lot, meaning I'm bullish on the company and I'm willing to own them at a certain price. When I say the term cash grab, let's clarify that, please. I'm only cash grabbing because that's what the market will let me do based on the current pricing situation for that stock.
Right.
So I have no choice but to cash grab in my mind because I have zero intention of owning the shares at this price. But if I want to make any money selling a cash secured put, I have to be willing to put that trade up at that makes sense.
Correct. Yes.
And I'm thinking $10 is, well, just like I Text Chris Patel, $10 is my price target for ownership on HIMS. Just like 14 to 15 is my price target for ownership on Robinhood. That being said, let's say Robinhood trades sideways for the next 3 months because the market's waiting on more data, and we execute this trade successfully in this 1650 range 5 or 6 times during that quarter, and we've already made $7,500, $10,000, whatever the case may be, then I can artificially increase my price target from 14 to 15 to the $15 to $16 range because I have that margin of safety because I've already locked in some wins along the way, if that makes sense.
That makes a lot of sense. No, that makes a lot of sense. Yeah.
So that is why I use these terms like manufacturing to win, because I'm manufacturing price targets. I'm lowering adjusted cost basis by selling puts and calls and collecting premiums. Now, mind you, whenever you sell a cash secured put and then you close it for a profit, that's a taxable event, short-term capital gains.
Correct.
It's just like a job, dude. You're going to go work and they're going to pay you $100,000 a year. Does the government allow you to keep all 100 grand in it?
No, they don't.
So then why is it going to be any different here? So taxes, dude, I mean, dude, unless you have that special kind of job that you don't have to pay taxes on, I don't know what you're talking about, because that's not a valid argument.
Yeah.
In this country, if you make a profit, the government wants some, bro. That's just the reality of it.
Do you think about tax implications ever when you're closing and making trades, or you think about the money first, taxes after?
No, dude, I do, especially if it's about me selling shares for a profit. If I'm like at the 8-month mark or the 9th-month mark, I can make a lot more money by rolling this covered call to make sure that it's going to put me in a situation where I've owned these shares for over a year, because now I'm going to go from short-term gains to long-term gains.
Right.
And that's a huge win in and of itself, because you're talking about 15% difference for me. It's gonna vary on your tax bracket, right? Because I'm at the max tax bracket.
All right, because you're rich.
Because well, I do well. So dude, I don't think you're rich until you got 20 million. My perspective has changed.
Yeah, well, it has to. And when you get 20 million, it's going to be 100 million.
It's going to be 100, bro. That's just this is an infinite game, guys. It's just a fucking number. Well, but the reason I feel rich is because I'm married to the woman that I love. I'm reasonably healthy for my age, and I love what I fucking do. It feels like I don't even work, but somehow the money keeps pouring down.
Yep.
That to me is fucking rich. Because there's people that make $500,000 a year, but they're fucking miserable. Are you really rich? You know, I mean, granted, I make more than that, thank God, but I'm just using it as an example, though. But I mean, imagine making $5 million and fucking rich, but you hate 50% of your life because you hate your job and you're there half of the time. I mean, dude, is that really worth it? You know what I mean?
Well, that's why I think this podcast is so interesting, and that's why I'm getting so into wheeling, because there are lawyers that make, $1 million a year, but they hate their life. You and I and the 700 people here in the chat, we all love the stock market. Right. And my philosophy, and I'm pretty sure a lot of people thought a couple of years ago, was, all right, you find a good stock, Palantir, you buy it, and you hope it goes up one day and you make money. And I remember you early 2022, you were like, I mean, you have a lot of shares that are just sitting there and they're not doing anything for you. And I'm like, well, what do you mean doing something for me? And that's when I got into wheeling. And if you could take wheeling to the next level, if you have a sizable portfolio and you're making a conservative 1 or 2% a month on some money, that could be $500,000 to $1 million a year without having to worry about hating your life, because it's about the stock market and we all love stocks at the end of the day.
Dude, we're going to follow these drama shows anyway. You might as well turn them into dollars, bro. I'm addicted to this shit. I mean, dude, do you not? I mean, I kind of hate it in the sense that I got to do more work as far as earnings season goes. But I mean, that's kind of like our crescendo 4 times a year. It's like our fucking Super Bowl 4 times a year, right?
And it lasts for like 3 weeks.
I know, it's fucking orgasmic, bro. It's awesome. Like for women, for us, it's we're fucking done in like 10 seconds. But for them, it's great. So
once the results come out, it's up or down. That's
earnings is awesome. For a man, we're like, oh, that's why she likes it so much. And it's great. And then I love whenever my stocks are. It's like it is about 3 weeks for my stocks, because once I'm out, I'm done, I'm done with earnings for this cycle. So the only other one that I'm real excited about now is it's the needle mover. I call them needle mover stocks, even though I'm not invested in them. They do move the needle, and that's NVIDIA.
Ah, right.
I mean, I'm interested because as she goes, so goes the market right now.
Yeah,
because she's the hottest thing on Wall Street. And if she can deliver good numbers, which I think she's going to, but it's about the guidance.
Yeah.
If she's bullish on guidance, fuck, I'm excited about the next 90 days. If not, I'm going to be a little bit more conservative with my cash secured puts because she's got great growth, great earnings. I mean, it's a big company, but they're growing like a fucking penny stock as far as the company goes. So they're commanding these crazy valuations as well. And if she's saying, hey, we're good, then I'm excited. And we get positive inflation data, I'm going to be even more excited. You know, that gets me more bullish overall as far as the macros go.
So real quick, TJ, before we end this out, we got Robinhood at 1678. Do we want to make a move right here at 1678?
The only move that I look to make is selling more cash secured puts.
No, that's what I'm saying. Do we,
yeah, but on the actual position that we have now.
Yeah, I mean, let's look at the premiums and see maybe the premiums got, because on a red day is when you sell puts, right?
Well, that's when you maximize your premium, and the reason is because this is like the falling knife right here, right? So you're going with the current. You're basically saying, hey, it's right here, and I'm like, can you see my cursor on the screen or not?
Yeah, yeah.
So here's the little arrow, and let's just say that I want to do it like right here. Let me see if I can go advanced. These charts on Robinhood aren't so great. So this is probably a 200-day or some shit. Yeah. So let's take the 200-day out of there. So Robinhood's here. Let's go for like a month. So, I mean, is it really that big of a deal, guys? I mean, I'm just looking at it here, just real amateur stuff right here, the amateur stuff. This isn't like Vitaly with all his fucking lines and graphs or anything. But I can tell you right here that this little mark right here is very similar to where we're at. So that's support going back to April 17th. So we go to the 3-month chart. Like whenever, and when in doubt, zoom out. You follow me? So then year to date, I mean, Robinhood was over here in, what is this, January. It was over here at these levels, 11.97. And then the shit went all the way up over here, Amit, to the $19 range, $20 range. And then now it's kind of working its way back up, way back down over here. And we're under 17 right now.
Yeah.
So I look at this little area right here. Like right here is where it has to hold. So it has to hold this little area right here of 1583. If it doesn't hold that area, then you got to go back over here, and it could probably go all the way here because I see a big ass gap right here that happened very, very quickly. And I'm doing real elementary stuff. There's a lot more shit that goes into it, but you can just look at it and just see, because whenever you zoom out, shit becomes a lot more obvious to you.
Yeah.
And you can see that this fucker traded sideways here for a hot minute, right? Way over here.
It was a while, dude.
And then it went up. But we can also agree that Robinhood's a little bit of a different company now, right?
Yes, sir. Yes,
so,
sir.
but here, I know here it looks like, oh shit. But the only thing that I see right here is I just see consolidation going on.
Yeah.
So it hangs at these levels. That's not the worst thing. But we also got to keep in mind when this fucker went public. This is when it went public over here. Remember all that? Kathy Wood, all crazy with Robinhood?
Yeah.
And then all it's done is it's gone down since.
It's like slightly, it's like coming up for water after being down 80%, you know?
But bro, when you zoom out a minute, look at this. February of 2022, $15, give or take. And what are we at now? 1672? I mean, there's a lot of excitement along the way, but I mean, you can argue that it's just been consolidating, and it goes about from this level, it goes down $5 and it goes up $5. That's the consolidation range.
Literally.
Because in another 10 years, that's how people are going to look at it. If you look at the Tesla chart, that's what it was, dude. It was fucking sideways action until 2019.
Yeah.
And then the shit went up like crazy, and people like Vitaly made a fuckload of money. You know what I mean? Because they saw this move playing out. So to me, everybody's excited about this move. I'm looking at this move.
So do we want to look at the 15.5 strikes? Or
so let's get back on track here. How can I do it? Here we go. So let's look. So how much cash do we have to work with? So we've got, let me go back over here real quickly so we can add up the collateral. So we have Shopify. We got 60,000. You want to do this on your calculator real quick, Amit?
Yeah.
So these are open trades. You have 60,000 on Shopify. You've got 33,000 for Hood. So that's 93,000. Then you've got another 116,000 on Shopify and another 8,250 on Hood. I mean, I could probably
220, round out 220.
So
we
220. So you got, what is that? 270 to work with?
280. Yeah, 280 to work with.
So yeah, dude, I'm cool. I'm cool in the $16 range. And
Okay, let's see the premium. Let's see what we could get. Because it's down, what, 5% today?
Yeah, it's a good day. I mean, if you have money and you're willing to sell cash care puts. So
Yeah, dude,
like over here, 21 days out that we want to drag this shit out. I mean, it's interesting because we got to look at how much did we get for these.
We got 59 for those. Those are up 11 cents from where we.
No, I'm talking about like how much did I get for these? I think it was.
I think our average was 59 cents that we got.
Yeah, 49 cents is what I got average.
Okay. Now they're at 70 cents, so they're up 30 cents basically. 20
no,
cents.
I'm down. We're down 30 cents.
No, I'm saying, but it's worth now. If we were to sell another put, we would get 70 cents of.
Yeah, we kept the same strike price.
Yeah.
So that's an option. We want to be super greedy. We can just average down on this one.
Correct.
Or we can be more conservative and go another run down the ladder. And now you have two positions that you're managing on the same company. That's what I like to do.
I like 15.5. Let's see 15.5.
Okay, cool.
Because if we get it at 15.5, I mean, I think that's a blessing to get shares at that level.
What were those expiration dates though? I have
31.
so many options that I don't remember this shit like y'all think that I would, because this isn't the only portfolio I manage. This is just my baby that I look at all the time, because this is what I have to work with on my personal life. But there's a lot of other options in my head right now. Across the board, I have over 500 positions that I'm managing, guys. So I don't look at this shit as much as you would think. So 531, that's what we're looking at, just to match up the expiration dates as well. So we could do something fun, and we could do something that expires next Friday and gets, pretty good money at 16, or you want to go all the way to 531 to match the other ones, and 15.
Dude, can we go out a little bit more? Can we go to June? I don't think Robinhood's 15.50 by June, and I think we'll get a little bit more.
So we can go 35 days out. This is exciting. 40 cents is
decent. I like that one. Actually, no. Okay, let me ask you a question. So
27 delta.
15.5 is at 43. What's the $15 strike?
35.
Okay, so obviously 15 is way safer. I want to ask your question. The difference between 35 and 43. What would you do? Which one would you pick?
It's just the math. The math. And then I look at the 200-day moving average. I look at the 50-day moving average, just like a little bit on the technicals. I look at the RSI, whether or not it's approaching oversold. So there's a lot of shit that goes.
So from a premium perspective, would you make a difference about 8 cents in premium between 35 and 48 on 15 versus 15.5?
Yeah, it's worth considering, but I also look at more than premium. I look at my stress level.
All right.
Like, what kind of trade do I want to get into? Do I want to get into one that I really have to manage, or do I want to get into a sleep well at night trade, those swan trades that we talked about in a couple of podcasts ago? And $15 is what you call a sleep well at night. Like, in other words, I don't have to look at this trade for 35 days, and I would be okay with whatever result. It either expires in the money or out of the money.
Okay, so I'm thinking we do $15.
I like it. I like 15.
I think 20 of those is not crazy. That's what, 30 grand? That's 30 grand. We would get how much? 336 times 20. We would get 720 off 30 grand, which would be 2.4% in a month.
Yes, I don't.
36.
I don't like the return.
You don't like the return. Okay. Now $16.
I'll just say straight up, I don't like the return. What does it look like at 15.50?
So what we can do 51 cents. So we get 20 times 51. We get 1,020.
Okay.
Over 1,020 over 31. That would be 3.3%.
Yeah, much better.
3.3. Yeah, that is better.
So how many contracts are there now? Are there 20 or 25?
Yeah, we'll do 20.
Yeah, but we're going to get a little more than that. Let's try to get like at least 53. Is that going to be medium? Yeah, let's see if we can get that filled. And now we'll go 52.
1,059. Oh, there we go. So 1,059 divided by 31,000. We have made 3.4%, hopefully, as they expire.
Over the next 30 days. Then I'll go here to the tracker. So this was 510. sold the put. It was what was the expiration date, Amit?
5:30 or 6:14.
And it was the strike price was $15.50, right?
Correct.
20 contracts. And what was the premium? 53 cents, I think.
53, yes.
There it is right there. And then open. That way this thing keeps track of it for us and we don't have to jack with it. And then I put these in blue because those are Amit's trades.
Oh, you got them color coded. Okay, perfect.
Yeah, I'm easy, bro. I'm from UT public school. We try to keep shit simple. You know what I mean? So anything that's not blue. So this is your project here. So I just call it Project Blue. And these are all your tickers right here. So this is every trade that we've ever done.
All right, TJ, I got to get out of here. My mom's yelling at me. I got to go fix some stuff.
I did too, brother. But what do you think about it? Just recap 30 seconds. Do you like the idea of being able to work with what I call like a more substantial bankroll? That way you don't have to be so timid with these positions. Because, dude, scared money does not make any money at the poker table, dude. I know that's a saying that people say a lot. I used to play poker for a living, and I promise you that the times that I wasn't playing scared, I made the most money.
Yep.
And we're talking about high conviction stocks, dude. Like, I mean, Hood at these levels is high conviction. Shopify is high conviction. The Hims was a cash grab that could potentially turn into high conviction. And then $10, $11 range for me. It's just I got to do a little bit more research because they have a very outspoken CEO. And I just don't know if I want to have too much money allocated to his big fucking mouth. I don't know him yet. You know, like if Vlad says something, if Karp says something, if Elon Musk says something, you know, if fucking Anthony Noda were to say something, it doesn't really bother me that much. But I don't know this other fucking guy yet.
Yeah.
But he does seem to want to talk a lot of shit and say a lot of things. So maybe he says the kind of stuff that puts Hims in the $10 toilet. And now I get excited about his big mouth because it creates an opportunity for me. But the company itself seems to really be clicking on all cylinders.
Yeah, well, the growth is undeniable. They're profitable. I think that's why Chris is liking them as well. First of all, I'm really grateful for having allocation of 500K versus 100 because it just opens my mind up to different possibilities. But the philosophy I'm going to use on this 500K over the next probably coming months as we deploy it is I want to do it on a couple stocks I know. I don't want to go try to find the next big idea. Like if Hood and Palantir, the majority of it, I'm okay with that because at least I know that I'm giving you the best allocation of my mind capital for your actual capital to be deployed correctly.
And that is, you've said everything, dude. You're ready. Because I do the same stocks over and over again because it's what I know and it's what I'm comfortable with.
Right.
And I want to sleep well at night.
It makes it a business. And as you said a while ago, you told me on our first episode, it should be boring. It should be so boring doing this.
It is, dude. I'm bored out of my damn mind half the time. But you know what? Making money whenever you're doing it right in the market, it should be boring.
Yes, agreed.
If you want to go gamble, bro, let's go to Vegas, dude. I'm down for a trip to Vegas. You don't have to convince me. But this isn't gambling. This is livelihood. This is a lot of strategy. You know, and you pick stocks you want to own. And now we're just doing the hardest thing in investing. It's deciding what is a fair price to pay for these stocks.
Correct.
That's the hardest thing that we're trying to do. That's the win that I'm trying to manufacture, because if I had that fucking crystal ball, bro, I'm not going to waste my time selling cash secured puts. I'm just going to wait for Palantir to get to X, and I'm going to pull the trigger. I'm going to wait for Hood to get to X, and I'm going to pull the trigger. But I don't know where the bottom's going to be. I don't know any of that stuff, so I got to try to manufacture the win along the way. And if Mr. Market wants to play ball at some point because it wants to be irrational and it gives us our price target, you got to be ready to pull the trigger. You need to stand behind the courage of your conviction and your research at that point. And that's where people miss the boat, is they do all this fucking research, but when it's time, their gun is loaded, they're locked and loaded, they can't squeeze the fucking trigger.
I agree.
And that's what I want to
And that's what we're squeezing the trigger on Hood because we've done so much damn research.
Well, you have.
Well, I have.
You have. I've watched some handsome guy that makes me feel uncomfortable. I don't like looking at him on screen no more. And then fucking Kristen saw a little bit of the episode. He's like, "Oh, he's good looking. Shut the fuck up. I don't want to hear it no more." So fuck Vlad. Vlad's out.
The haircut is nice though. He freshened up. It's a nice haircut.
He seems cool, dude. He's got a real hot wife, so that gave me peace of mind too.
And he's a nerd and he listens to
Kristen ain't gonna be into that shit. She ain't gonna know what that shit is either, bro. She's from Stanford, but she ain't nerdy like that. Like this fucking guy doesn't even do Metallica, bro, for an earnings report. I mean, come on, Vlad.
I thought he would say like Kanye West or like
you
hip
step
hop.
up your fucking song game, bro.
know
I
what?
talk too much shit. I'm never gonna have one of these CEOs on my channel, bro. But I'm just saying, though, like it's just it's because these guys are aliens, bro. They're these fucking founder CEOs. They're unicorns, bro. They breathe different air than we do, dude. It's fucking awesome to see. But congrats on that, brother. I got to get rocking and rolling. I love that your channel's blowing up, and now you don't have to do a paper trading account. You have real money to work with. Let's go make some fucking money and show people that it can be done, but you have to treat it like a business and you got to be serious about it and don't be going after the rush and the endorphins and the adrenaline. We're going after the dollars here.
I love it. All right, TJ, thank you. Appreciate this. This will be awesome. Maybe we just do this as part of the market open, dude, every week. I mean, on Fridays, it's
easy. Usually I go live on my channel, but I could do a market close on Fridays or something, or like around noon or something.
And a lot of people that have never seen our podcast before just got exposed to it. You know?
I'm easy, bro, because I mean, at the end of the day, like, I mean, yeah, I'm trying to grow my YouTube channel, but it's not, I don't obsess over it. That's not my thing. You know what I mean?
Let's put your YouTube in the chat as well. For those that want to learn more about options or really, I think this is the only channel on YouTube that really, really breaks it down the right way. So please make sure to subscribe to TJ as well. Also, TJ, you got to be with me for 2 more seconds. I got to do word of the day with you. So word of the day is mid, mediocre, unimpressive, or disappointing.
That was that $15 put that you were trying to sell me. Okay, go ahead, man. I'm sorry.
All right, guys. No, that's the best way to end it. That's the best way to end it. Thank you, everybody. Appreciate you guys following my life this week. It's been pretty crazy. Means the absolute world to me. I think we'll have Palantir Weekly today. If we don't, we'll have it tomorrow. I love everybody from the bottom of my heart. Make sure to follow TJ, and we'll see you guys. We'll see you guys later in the weekend. Bye, everyone. Have a good one. Good night.
Take care, my man. Appreciate you.